out of the products that they can buy from us. So there's definitely focus in terms of ensuring that we compete with the broader banks. Strategy framework in terms of automate a customer experience strategy. I think I've spoken about this, that is the focus in the business, and we've seen some of the results of that framework, of that strategy that's being implemented through the new channels, through the work that we're doing through the call center. Customer journey, this is again important from us, because as you design your systems, if you don't know what is going to be the customer journey within the business, and that's a signed off process, then you tend to design processes that speak to you as a bank and not necessarily to the customer. So again, this is something that we did achieve. The reimagining the brand, truly, I think this is something not only that we wanted to onboard someone to help us with doing this, that didn't go so well, but I think in terms of the focus on the communication, it really became around the card and the distribution of the card. So that got negatively impacted. Vacancy rate, this is something that was quite important to us. Happy to say that we've got a full exco except for the CRO who just resigned now in October in this last financial year, which we're about to interview for. We're busy now going to be sitting with the board to go through the shortlist and then book those interviews. So we're closing that gap. In terms of the culture transformation, again, important for us in terms of not only focusing on the experience of the customer, but also focus on the experience of the employee, which is why we wanted them to buy into the brand and get the product of Postbank. This is absolutely part and parcel of work for us to improve the culture of within the bank, so that people want to come to work. But this is also quite important for us in terms of retaining talent to come to the bank. I think, as you see in our exco, people who left really with almost on average 15 to 20 years in banking and joining, it means that there is something that we're selling, and we just want to make sure that is embedded within the business in terms of how we perform, how we hold each other accountable, how we deal with fraud, and also governance within the business, but also making a place fun place to work and be proud to work for. So that's what we signed off, and we're starting to implement that. In fact, some of the things that we've done, we've introduced EAP, which is about employee wellness. So we've introduced that this year, employee wellness. We've already done some interactive work that we normally hasn't happened in Postbank to try and build on this culture. So it's not only the framework, but there's also some work that we've done already. Training, again, this is a part of not only are we attracting externally, it's about building internally. So that is also happening. And again, some of the things, maybe to talk about the culture, I mean, we've reviewed employee salaries within the new scales, which is something that's historical in the business. That's been a really sore point for our employees. We're busy reviewing their benefits in terms of benefits that you normally get in any business. So we're busy reviewing that. We're about to take those to board within the business. And again, here that includes in terms of taking care of the employee, in terms of training them so that we can retain good talent and people who really have been with the business through so many years. IT architecture and strategy that has been approved by board. So happy that we've achieved that. Same as the IT governance in terms of which will then determine how we implement that IT strategy. The stability around environment. This was actually achieved. The only thing that I think audit penalized us on, rightfully so, was that in terms of the measures, what we promised here as the measures that will show us that we have stabilized our IT were not necessarily the measures now we're using towards the end. And that was just simply because when we drew up this APP, we didn't have a CIO, and as he joined in, he noticed that the measures that we wanted to use were not necessarily optimal, and the tools that we wanted to use were not necessarily optimal. So he's trying to get proper tools. As such, I know that he even has meeting or has met with even the SARS to even learn from them in terms of how to track performance. So he's just improving on what we had put down. So he didn't want to waste money to implement what we had initially put in on the APP when he had not joined, and said he's not happy with that. So he wants to ensure that we measure performance properly. But the reason I can then confidently though say that we have stabilized our IT environment, I think the one critical measure for us this year has been that there has been none since September 2023. We have paid every SASSA beneficiary throughout the more than 12 months, which is really the undertaking that we have made when we had the unfortunate glitch in 2023. There has been no disturbance in the payment of beneficiaries, even through the conversion of the cards. So that was really important for us this year. Issuance of the replacement of cards. So this is a technical thing as we talk about it, because we've made the capabilities. As we sit now, we're sitting with over 350 sites, but we know that not everyone came forward to come and fetch their cards, and therefore that's what that measure was speaking to. Business operating model, we've achieved that. Again, this is important for us because it talked to a sustainability of the business and as to how do we operate within the business to ensure that there's optimal delivery. Do we centralize? Do we centralize? What do we prioritize now in terms of our products that we're going to put in place? Do we have the capabilities? And that needs to align to the strategy that we have over the 3 phases of our strategy. So that has also been signed off. The resource planning, this has been done. It's just that we wanted to also bring in some help from externally to help us with the resource planning and the solutions, but just went unsuccessful with our supply chain process. Data analytics, again, very important for us that we've achieved this, because as we make decisions, if they're not informed by data, and we're already seeing the benefit of having this data analytics capability, both in resources and systems, and it's making a difference in terms of how we make decisions and ensuring that we're making the right decision, both for the customer and for the employee, and also for the strategy going forward. Digitization omni-channel process, this was not achieved because we've done alternative channels, which I've spoken to before, but in terms of really moving digitally to where we wanted, this not necessarily achieved 100%. We did make some changes up to about 50% as we measure it, but not necessarily as far as we wanted. Core banking system, we do have a new core banking system in terms of integrated across the grants and core customers. We've done that work, but we have not necessarily upgraded to the level we wanted. So that's what this measure is about. The platform business, we're having discussions around this. It's not necessarily live, but in terms of the business case, it has been approved, but we just now need to work and really, this is around resources and IT in terms of what we needed to prioritize more than anything. Material external audit findings resolved. Of course, we know that as much as the business did come out of the disclaimer, but in terms of the finalization of our audit and our results was quite delayed because we had to go back 6 years as they asked from AG. As a result, it meant that the audit outcomes of the year came out quite late came out quite late for this last financial year, and therefore we're still catching up on those. Section 16, we've done a lot of work here. This was just a technical measure measure, because our audit felt that he wasn't happy as to how we're measuring 50% completion, although we feel that we have achieved, but he wasn't happy in terms of how we're showing it. Variation notice, this again, as far as us, we've achieved this, and I think this is exactly what has made the conversations with the Reserve Bank really positive in terms of the way forward. So that's really good news. Compliance universe, that's also achieved. Risk management plans achieved at an annual basis. SOPs for supply chain, again, there's a lot of work that needs to happen here to improve how we do supply chain to ensure proper governance. So there's a lot of work that's still outstanding. Fraud management strategy, we had a fraud management strategy that was drawn. It's just that the proper governance in terms of the lines, in terms of the timing, was not necessarily achieved. And I think the fact that we lost our CRO in October just impacted the timelines to ensure that this goes through the proper governance before the due date. And that's it, Chair, from our performance. I'll just hand over now to Martin to just go, and like I said, we'll focus mainly on the Q4 financials because the Q3 have been overridden by the fact that we're already in Q4. Over to you, Martin. I don't know whether you want me to continue sharing.
No, it's fine, Nikki. I'll share from the side. Thank you. And good morning to everybody. Just get my presentation up here quickly. Okay, could I maybe just get someone to confirm if you can see the presentation on your side?
We can see it, just put it in.
Is it still not in presentation mode? Okay, there we go. Okay, that should be better. Okay, I think Nikki alluded a little bit earlier in her presentation to the fact that we're in the midst of completing our year-end financial statement close process, whereby we by the end of May will have a set of unaudited draft financials that will be approved by audit committee and board, which we hand over to Auditor General. So in terms of that process, we're fairly advanced. I think we've got one or two items that we're looking into still in terms of resolution. But as an outcome of the hard work that the team has done, we've managed to resolve a number of prior period issues with regards to matters that took place in years gone by, where we've now, through settlements or process of resolution, completed the exercises to assess and finalize those. That has resulted in, at this stage, a number of adjustments to the both prior period reported financial numbers as those issues related to prior periods, and also some clarity regarding the current period. So the numbers that we're presenting here today are the pre-adjusted numbers. So these were the numbers that we shared with management and the DCDT for the close of our Q4 reporting period. So, just a disclaimer, if you like, from a financial point of view, these numbers are not yet final and will be changing. At this stage, there are some positive changes to the numbers, moving us from a predicted loss position at this point in time to what we see at this point in time to a reasonable profit position. So just to dive into the key numbers then, I'm going to focus on, let me just get my pointer here so that I can highlight. So I'm going to focus on the year-to-date, year-end March 25 numbers, and relative to the prior period in the majority. So you'll note that our net interest income was 693 million for the year, relative to 614 from the same period last year. As Nikki mentioned, that part of the business has performed well. Our treasury function has invested, let's say, wisely and into good products, which has yielded a very good return for us, boosting our net interest income very nicely from the previous year. On the fee and commission revenue, so our non-interest revenue, this is the money that we earn from our clients transacting and the SASA subsidies that we receive. This has not performed as well as the interest side of the business for the reasons that Nikki mentioned earlier. So we've suffered in terms of a loss of customers, and that has clearly impacted our non-interest revenue, which is sitting at 263 million for the year, which is both below prior year and budget. If we look at our operating costs then, so a little bit further down, the operating costs are sitting at 961 million for the year, which is the sum of direct and support costs in the slide. That compares to the two comparative numbers of 1.555 billion, and it's clearly well below those prior year numbers. I'll unpack on the next slide the operating expenses in a bit more detail. So just to and what we see, last year we had a significant impairment charge related to our debt exposures. This year to date, we do not have any similar impairment charges, so very favorable period there. If we flip over to just a high level analysis of our expenditures for the year, what we'll see is that I'll just pick up the significant ones. So staff costs, 213 million, quite significantly below budget, and a little bit up on the prior year due to some new hires and some salary increments, as Nikki was mentioning, the scale adjustments, etc. IT costs, there we're ahead of the prior and budget period predicted numbers. This is as a result of the build the bank phase where we're investing in technology to assist us in our operating environment and model. Support costs are pretty stable in terms of the budget, but significantly down on the prior period, which is a pleasing trend. And then I think the other one that's worthy of mention is this line item called material and services. This relates to the cost of our debit cards that we procure, which we issue to our clients. And just to mention, this is a pre-adjustment number. So what we still need to do here is we need to assess what the inventory of cards on hand at the end of the year was, and how much of that we can allocate to the balance sheet. So there will be a reduction in that fully loaded cost line item in the final numbers as we migrate under IFRS a portion of that expenditure and capitalize it into the balance sheet for expensing in future periods. Just to note on this slide, just a point of interest, the other expenses line, just the prior year period, that does include that impairment charge that I mentioned on the previous slide, hence the size of that number. The other thing to mention in terms of the overall cost environment is that the card replacement project, or the variation notice, has resulted in an increase in our cost base for the year. There's approximately, including the card costs that are in here, about 216 million of project-related costs that are embedded in these numbers. I think the next slide is our balance sheet. Here we see that the total assets reduced slightly year on year by about 795 million, which is mostly as a result of these two line items, trade and other receivables, and the SAPO intercompany account. There were settlements that took place there, and a reduction in those numbers. That amounts to about 606 million, which is the primary driver for the overall decrease in total assets. You'll also see a bit of a mix change between cash and investments compared to the prior year, and those decisions are, or those values, let's say, are driven by treasury decisions in terms of getting the investment, the timing of our investments optimized, let's say, in terms of what the market's offering for different products at different times. So at times we could end up with a bit more cash in those type of accounts, as we're anticipating an investment opportunity with a higher yield to open up in a sort of near future, and then we move the monies into our investment portfolio. On the liabilities side of things, you'll notice our total deposits to our customers have reduced year on year by about 880 million. This is directly attributable to what Nikki mentioned earlier about the customer loss, both as a result of the SASO audit and cleanup process, and the variation notice impact for us as a business. The rest of the balance sheet is pretty stable. I wanted to also just mention the negative total equity number that's reported in these preliminary financials. Our recent draft financials show that it is back into positive territory. So pleasing results, and look forward to sharing our annual report when it's ready with the committee. I think that I'm not going to go through Q3 because I think Q4 covers Q3 in its entirety, and I think that's probably where I'll call it then.
Thanks, Martin. And maybe just sharing closing from our side. I think the good news is exactly the fact that Postbank, as an income statement, will probably end up positive, will close in a positive year post the final working that Martin is busy with. And this is quite critical for us because we had budgeted, maybe Martin, can you move back to the income statement slide? We had budgeted that will end up negatively, but we've worked very hard to try as much as we didn't have new customers, but to manage the cost as well, and also optimize as much income as we can in terms of the interest income. So like you said, that this 4,869 will probably change to a positive number towards the when he finalizes the numbers and we have the audited numbers. Thank you, Chair. Thank you so much.
Yeah.
Thank you. Thank you very much to the Chair, the CEO, and the CFO for that presentation. I'd like us to go into the final presentation, which is the SABC presentation. It's still early in the day, so I don't think there's a need for a break. If the SABC is ready, we can then take the SABC. Chairperson, are you in the meeting?
Yes, I am, Chair, and good morning to you and good morning to the members. I am with the CEO, and the CFO will take you through the presentation. Just to summarize, Chair, you will note a story of two tales in the presentation that we'll be giving to you. On the side of performance information, you will see that a lot of progress has been made, comparatively speaking, to the previous year. There's significant improvement there, of course, subject to the audit by AGSA, whereas on the financial performance side of things, in particular from the comprehensive income statement point of view, you will see a decline compared to prior year performance, where the losses are showing a steady growth from where we were in the last reporting period. Whereas on the balance sheet, we are looking forward to a better and improved position as we conclude the year-end processes for 24-25 financial year. The CFO will also speak a little bit and focus on issues around the going concern liquidity issues, that and interventions that we are making to address the areas of going concern. You will remember that the going concern area remains an area of concern from the AGSA. There are quite a number of interventions that we've made on that side, which we will be presenting to the AG for consideration. But let me hand over to the CEO and the CFO to take you through the detailed presentation, Chair. Thank you.
Thank you to the chair of the SABC. I think it might be a bit dark on my side. Honorable Chair, please forgive me for that. But good morning to the members of the Portfolio Committee. Good morning to the chair and to the DG and my fellow colleagues. Honorable Chair, as you know, we are going to be taking you through the performance of the SABC for both Q3 and Q4. But based on our current position and the fact that we've now ended the year and are already reporting on Q4, the majority of this presentation then, if you may indulge us, Chair, will focus on Q4 itself. Without further ado, I'm going to put it at full screen on my side. And if it so happens, Chair, that I'm moved on to another screen and it's frozen on your side, please let me know. And if it happens that perhaps there are some audibility issues, I will depend on you to just warn me if there's a challenge on that perspective. Chair, I'm not going to really go through the introduction slides because you're well versed with them in terms of the SABC. Our strategic goals still remain the same for the period under review. Chair, SABC has on various occasions to this August committee presented our corporate plan. Our constraints going into Q3 and Q4 remain the same. We still are struggling with the issue of lack of compelling content, but I will address it when I report on performance. And I think this more than anything is related to financial constraints, which really talk about us being able to go out and procure compelling content in order to attract new audiences. Chair, the committee is very much aware of the struggles that the SABC is having in terms of the innovative funding model. As we end the financial year 25, this issue remains central to our sustainability. And that speaks to the mandate, the legislative and regulatory constraints that we are experiencing. Chair, we are still unable to borrow to fund CapEx and working capital, although we have gone out to the financial markets to seek partnerships and assistance, but there are still quite a lot of challenges that we face as we go about those activities. We are looking at our people and system constraints, and this is one of the areas that we focused on, particularly in Q4, in terms of ensuring that we meet that confidence with advertisers, because when it comes to fulfillment and enablement, it's very critical when you are dealing with advertisers who have paid money to be on our platforms. There is a slow pace of monetizing SABC Plus, but I think what's important more than anything here is that we are experiencing market constraints. But what we have done is that we have, in fact, on this Thursday and Friday, we're spending time with the board, taking them through the strategy of SABC Plus, how we are going to be monetizing it. But the good news of it is that we are seeing phenomenal growth on this OTT streaming platform. From an SABC perspective, we see this as very essential to the sustainability of the public broadcaster. The issue of the analog switch off uncertainty, Chair, is still persistent, even though the outcomes of the court case remain. The reality is that for advertisers, certainty is very critical, because when we go out to market to sell advertising, we sign long-term contracts because it's not possible to sell on month-by-month basis. And therefore, that uncertainty has resulted in advertisers being unable to really invest for the long term, because they are not certain if the audiences that we are selling in January will still be the audiences that we will have in September, which is how they really buy from an advertising and share of voice perspective. But Chair, we do have the accelerators, and pardon me for the spelling there, but what we've got, unparalleled reach still remains in terms of our footprint and audience. And despite the challenges we do have very loyal advertisers who utilize the SABC's platforms. We do have our legacy content, which we are syndicating and bringing forward to SABC Plus content, and we are seeing very good performance coming from that legacy content, and I'll speak more towards the digitization of that legacy content as part of our strategic pillars and our KPIs for the quarter. Our radio listenership has remained very strong in terms of loyal audiences, and there is real potential to grow from a revenue perspective, but there's been green shoots here, and I'll talk to them later in terms of what we're seeing from a revenue performance where radio has really shot above its weight. People remain very critical to our success, and one of the key things is that we have revised our people strategy to ensure that it's fit for purpose. Our advertising is critical, and obviously our audience data. You are very much familiar with our breakthrough programs, but the notable achievements for the past 2 quarters is that we have now appointed our new Chief Operating Officer, Mr. Lungile Binza, who is no stranger to the committee as he has previously served as acting in this position, but most importantly, his substantive role was the group executive for technology. And technology, as you know, Chair, is very critical to the SABC sustainability. So he brings in a very strong skill set from that perspective. We have now developed and finalized our sales operating model, which in fact we will be taking the board through. We've started executing it, and we will be taking the board at our workshop on Thursday and Friday in terms of progress in that area, and the progress is there. I've already spoken to the HR strategy. SABC Plus growth is really our success factor, and we are seeing real growth from that perspective. And one of the key things that we are doing is developing distinct business and operating models for that platform. This is a very competitive area, Chair. We are competing with big global brands when it comes to OTT streaming platform. They have very deep sets of skills when it comes to advertising, of these platforms. And as SABC, we are gearing up to be able to compete, and I'll talk to it later. I've spoken about the radio revenue improvements, which are much better than prior, and I'm certain that the CFO will also touch upon that. And we are very proud to say that the SABC News channel still remains #1 from a satellite platform perspective with 35% market share. But what's important here, Chair, is that SABC in general, because of the breadth of us being the only broadcaster that really offers news in every language from a multi-platform perspective, we remain #1 when it comes to share of market for news. And it's something that we are strengthening and that we guard very jealously. The good news is that despite the challenges in acquisition of content, we are seeing very strong appeal of SABC content, with 6 out of our top 10 news broadcasts on free-to-air TV and 8 out of our top 10 current affairs broadcasts being SABC. So that performance is very good. But I think what's exciting as well, Chair, is that we are seeing a presence when it comes to, primetime television, and I'll go through it when I go through the performance by pillar. And the good news as well, Chair, is that from a national sports of interest perspective, we've achieved and actually overshot our targets. We remain the go-to platform for South Africans to watch their favorite teams and ensure that they are entertained. The YouTube channel has surpassed 1.49 billion lifetime views. It's one of the best performing YouTube channels, not just in South Africa, but on the African continent. We've also introduced SuperSport Schools in partnership with SuperSport on SABC Plus, which is performing very well. There is massive growth when it comes to school sports, Chair, and school sports are very critical in building a foundation for the future of national teams, and SABC continues to play a very critical role in that fora, and that this partnership is very important in ensuring that young people have access to sport, but that it gets built and it attracts, the relevant commercial support. We are progressing with the DTH solution, Chair, and we, even though here we're seeing, appointment in the next quarter, this is still going through the SCM process, and, we will take guidance from that process for this one. We've launched new platforms in terms of websites, and I'll talk through them later, and the legacy of our material. Chair, in terms of targets, that have been achieved for Q3 year to date, we're sitting at 54%, and you will see the trajectory, and Chair, I will skip immediately to Q4 after this. So if you look at standalone Q3 alone, we achieved 59% of our targets, but if you look at the year-to-date performance, we achieved 54% of our targets. And I will skip to Q4, which is really the more relevant one in terms of the report. And the good news here, Chair, you see that now we've reached 68% performance for Q4 Q4 targets, which is very, very critical for us. And from an annual perspective, the forecast, and it's unaudited because the audit is still, the internal audit is taking place. But, as you know, we are undergoing now the overall financial year 25 audit. We see it resting above 70% from an annual targets achievement, which is very critical, which is a massive growth from the 52% that was achieved in 2024. I will just speak to, Chair, mostly the areas that are unachieved so that I don't labor the point. I think what's important, and I'll leave the financial sustainability mostly to the CFO because I don't want us to be repetitive. But I think what's important here is that even though, to the Chair's point, when he introduced the SABC's presentation here today, he spoke about the challenges that we are facing from a financial perspective. But I think it would be remiss of me not to talk about the fact that even though the revenue is below budget, the total revenue for the quarter was 5% higher than the prior year. Although it was 15% lower than budgeted. And the key lead indicator for that is that the advertising revenue really fell short. Both advertising and sponsored revenue was massively under budget for this period in time. But the good news in terms of the green shoot is that although TV license revenue was again 8% below budget, the targets for 25 were extremely ambitious and were massively above the 24 budgets in terms of context. But even though the TV license revenue was 8% below budget, I'm very happy to say that it performed 13% higher than previous year, and mostly due to a very strong collection strategy and also successful efforts to drive the renewal of TV licenses. The other, from a content and audiences perspective, if we look at prime time, I'm focusing on just on the rates. We are still experiencing, a strain when it comes to content acquisition and development. Because if you look at SABC's cost structure, Chair, content acquisition is one of the top 3 costs for the SABC. However, I think the good news is that to mitigate this, we've really actively pursued alternative opportunities for acquisition of content. And what we've done is that we've seen some notable success on this. To this area, we have now introduced a new show, which started on the 28th of April called Amalanga Wafani. And I'm proud to say that it's already performing in the top 10 of content in South Africa, which means that it's already it's got viewership of above 1 million on a daily basis. So that's the 6:30 slot on between Monday and Friday, and we've also introduced other new content from a weekday perspective. So, Chair, based on this, we are certain that we'll see an increase on the television screen ratings for Q1 financial year 26, and what we've done as well for SABC2, we're introducing a new telenovela starting in August, which is going to be replacing the existing Mubango. And we are certain that based on the storyline and where we are in the script writing room, this should also be as successful from a launch perspective as Amalanga Wafani. So we have come up with mitigating activities in order to ensure that these indicators are addressed. From a digital perspective, Chair, the OTT streaming platform is continuing to perform very well from an audience perspective. Registrations at the end of Q4 were sitting at 846,973 registered users, which is way above the target that we originally had from an SABC perspective when we started the financial year. But I think also what's important for this quarter is that we experience integration challenges when it comes to the scheduling system. So when we talk to the SAMS project, that's a scheduling system, that's an advertising management system, which we use to schedule adverts on all our platform. But what we have done is that we are really focusing, and this project remains on track to be completed in December 2025. This is a very, very big project, and it's very critical because it's really about the revenue of the SABC. If there's any issues here, they will result in serious losses from an SABC perspective. The good news as well is that we have actually implemented the MCR. The MCR is a very critical technology for SABC. The digitizing of legacy material is also, moving very positively. We've currently digitized 66,000 plus content hours, which is exceeding the annual target of 60,000 hours. It exceeds it by 12%. So there is very good performance when it comes to this digital pillar. And I think what's important as well from a cybersecurity perspective is that from an SABC perspective, we've seen that our systems remained robust and there are no system downtime or cyber attacks that have taken place during this period. Our people, Chair, we've had to relook in terms of the strategy from a people perspective. We've had to rebase. The good news is that we've now established an employee engagement where we know very well in terms of how engaged our employees are. So we've used the Gallup survey in order to establish the score, and going forward, we as management have put together strategies in terms of how we are then going to mitigate and move the needle to ensure that our employees are engaged, and engaged employees translate to achievement of our corporate plan. And what's important as well is that we've established the executive team performance score, and all the executives currently have their performance agreements, and the performance reviews have taken place. And going into the new financial year, those performance agreements are going to be revised in order to adjust, to ensure that they're adjusted with the corporate plan, and will ensure that SABC is able to meet its obligations. The research and innovation pillar, Chair, is a very, very critical pillar for us, because when we talk about innovation, when we talk about SABC Plus performance, this is genuinely where it comes from. This is where innovation takes place. Here we have a very strong EPMO capability that we've built in the last 12 months that's looking after all those key activities I talked about. For example, SAMS in terms of the advertising technology that is required for us. And in here as well sits your SABC Plus project management. And so this innovation capability is strong. And in here as well sits all our research projects that really feed into activities and insights from an SABC perspective to enable us to make better decision making and have a clearer understanding of audiences, the market in which we operate, because insights are everything, Honorable Chair. Without those insights, SABC is unable to effectively compete. And then lastly, from a pillar perspective, I'm moving towards sound governance and partnerships. And from a sound governance perspective, I'm very happy to say that at the end of Q4, we had addressed 92% of the findings raised by the Auditor General for the financial year 24 audit. And this is very important because it underscores SABC's commitment to strengthening our internal controls environment. And what's important here, Chair, is that we've really established a fully fledged, for example, SCM department. SCM governance and compliance are very critical to the SABC. We've also stabilized the leadership of SCM, whereby we've appointed a head of SCM, and we've seen a cultural and change when it comes to this area. And we've also introduced robust risk management and internal controls, which really have assisted us in reducing these internal, the audit findings. I'm going to hand over to the acting CFO to take us through the financial performance. Thank you, Chair. Over to you, Tendai. Tendai, can you hear me?
I can hear you.
Okay, thank you.
Good morning to you, Chair and members of the committee. I'm hoping that my audio is clear. We would concentrate, as indicated by the CEO, on our Q4 and year-to-date performances. One thing that I would want to just bring to the attention of the committee is that as at the end of Q4, there are significant financial reporting matters that would not yet have been resolved. These relate to our post-retirement actuarial valuations and matters relating to PPE revaluations that normally we get our actuarial service providers to attend to this after year end. There would, as a consequence, be adjustments, a material adjustment to the reporting numbers. However, the reporting and operating results would not be affected, as they tend to be disclosed separately in a statement of non-comprehensive income. Year to date for the financial period, the total revenues for the SABC had a marginal increase of a single percentage point, even though this was significantly below our budgeted numbers. You will recall, Chair, that when we presented our Q1 and 2 numbers, our performance was tracking significantly to exceed prior year performance levels. However, the issues that have been dealt with and engaged with by the committee remained unresolved. And as the CEO has mentioned, the uncertainty that was created in the market saw the SABC's performance retreat, particularly around Q4, as the ASO question received engagement within the court processes. That retreat in Q4 saw our commercial revenues, particularly advertising and sponsorship revenue, decrease year on year by about 5%. And what makes it more difficult is that the entire advertising or media buying market has been depressed for a while, and even our competitors, not that it gives me joy, are suffering the same effect in the market. And for us to then be able to compete, given the additional matters that we had to address around ASO and possible loss of audiences, we had to compete based on our rate cards. This put pressures on our pricing in the market and effectively eroded our margins as we trade in the market. The positive green shoot share was around our TV license collection, which sustained growth quarter to quarter, and for the full year managed a double-digit growth. And for that, we attribute to internal improved management processes, but more importantly to that portion of our citizenry that has obliged us and paid for their TV licenses. If you look at our expenditure line items, you realize, Chair, that as at the end of Q4, there is a reported increase in employee cost. To put that in context and perspective, our cost to company and the cost that we incur to our employees remained relatively flat. There are actual evaluations that I alluded to that affect the measurement of the total benefits paid to employees, including pension fund, etc., which as of this year, the reporting date, we have not yet factored, but in the prior year had an effect of a credit on our total cost of plus or minus 300 million. So if you look at what might appear on the face of it to be an increase in employee cost, it is not an increase in the cash payments to the employees, but it is occasioned by the actuarial and post-employment benefits that have been measured as such. Our investment in our content, which is the next significant line items on our program, Film and Sports Rights. We have tried to manage the cost as through partnerships, and you notice that it is significantly under budget and has also slightly declined from year to year. We are trying to do the best that we can with the resources that we have. But the drawback is because of the liquidity challenges and the issues that we have brought before the committee before in other sessions. Our rate of execution on our strategic initiatives becomes more staggered and more measured to fall in line with our affordability parameters. We would have wanted to accelerate the implementation of our new TV programs, as the CEO has mentioned, but we are constrained to operate within that. And because of that, our road to financial sustainability also becomes extended, but we continue to work on that. The matters around signal and distribution costs with Centec, the account is subjected to a national year-on-year inflation-linked increase. However, the settlement of that account still remains not resolved for prior year debt. However, in the current year, we have significantly tried to increase the cash that we have paid to Centec. If you compare what we then paid to Centec this year compared to last year, the increase in actual cash paid to Centec has been significant, in excess of 300 million compared to prior year levels. Our total expenses have grown year-on-year, plus or minus 11%. There is significant repairs and maintenance that we need to catch up on. The state of our infrastructure has been a subject of concern, and because of that, there is little room to reduce that portion of our expenditure line items further. Again, we would have wanted to attend to that aspect of repairs and maintenance, even at an accelerated rate, but we still continue to manage it within our affordability ratios. If I may ask CEO to move to the slide on the PBS PCS. This slide, Chair, just tries to provide a divisional clarity on how the portions of the business are performing. There is some encouraging recovery in some of our loss-making radio stations, but you see that the majority of our public mandate or PBS services remain largely loss-making, with the exception of SABC 1. And again, it talks to the issues that we have previously raised around not only the funding model, but adequate funding of the public mandate. And it is a problem that we continue to grapple with. If we move to the next slide on TV licenses, it just shows on a detailed breakdown of the various streams within TV licenses. Almost every stream of that has grown compared to prior year, with the exception of new TV licenses. I think that is a function of the broader macro economic pressures that the population and the country is facing. If you then look at the continued losses, Chair, it does point to the fact that as an organization, we still remain with the unresolved question around our going concern and financial sustainability. And as we go to the audit process, we are addressing the issues twofold. One, we have managed to resolve issues around our solvency, which is the strengthening of the balance sheet. There have been positive results coming from our cure valuations that were not yet factored into that, where our post-retirement assets and the employee cost will receive an improvement. If you had noticed, I think in our previous presentation, most of our financial losses as they pertain to the erosion of our equity were arising from negative market movements in our post-employment benefit funds. That has improved. So when we do present our financial statements, there would be an uplift in that portion of the balance sheet. We have further strengthened our balance sheet by revaluing a portion of our assets, land and buildings, to fairly show the value of those assets, because it's assets that we have held in the business for a long period of time and had been traditionally valued at historical cost, which has not done justice to reflect the true value of those assets to the business. On short-term liquidity, there are various measures we are pursuing as a business. We have numerous initiatives that we are pursuing in the market to try to raise capital. It still remains a challenge because of our current weak balance sheet, which we hope the initiatives that we have put in place will address that. But in the absence as well of shareholder support, it makes the conversation difficult in the market. However, we still remain positive that some of the initiatives that we are pursuing will bear fruit. We are unlikely to resolve the going concern risk, but we should be able to maintain an unqualified audit. We have addressed all of the audit findings as of to date, and we are working with the internal audit just to get assurance on that before we submit that to the audit. But in terms of our outlook, we remain positive that we will be able to maintain an unqualified audit. I'll end the chair and hand over to you. Thank you.
Thank you. Thank you very much, CFO, CEO, and Chairperson for the presentation. Interesting things I think members would have noted on all of the presentations that have been presented to us. Members, do you want a 5 minutes break before we go into discussions? We will have at least sufficient time to talk. Okay, I see a thumbs up. So let's reconvene at 11:11, prayer time while we pray for the President in the United States, 11:11, and we will continue with our meeting then. Thank you so much. Hi, colleagues. Welcome back. Welcome back. I hope you managed to walk around, stretch, get some water, get some coffee. So we've received the presentations from the South African Post Office, the Postbank, and the South African Broadcasting Corporation. And I think, as it had been said right at the beginning, that they're a mixed bag. There's obviously some successes, there's obviously areas of concern. I'm going to allow for the members now to engage with the presentations. Can I see a show of hands? Honorable Subrathi, you will be first. Okay, Honorable Subrathi, please proceed. I'll take other hands as they come. You'll be followed by members. I'll call them out. You are muted, Honorable Subrathi.
Chairperson, thank you so much. Am I visible, Chairperson?
Yes, sir, you are visible and you're audible.
Thank you so much. Chairperson, let me also welcome the presentations by the Post Office, by Postbank and SABC. And maybe to use the imagery in at least for myself, I would consider these entities to be the analogy of a hospital in the ICU unit of a hospital. So they require the constant care of this portfolio committee. So hence, when they appear before us, we give it special attention because of their importance to us as a country and the critical their role all three entities play. Jefferson, I will start off with SAPO, and maybe my first question for the post office would be, what would be the measurable strategies and specific measurable strategies that SAPO, the post office, has implemented or is implementing to diversify its revenue streams beyond the traditional postal services? And we get a sense that the postal services is declining. And maybe linked to that, how do they envisage that trajectory, that graph of postal services? And maybe my question is, how do we intend to resurrect it and bring the revenue graph up, especially in the digital emerging space, so that we can ensure that there is long-term sustainability of the post office without having to depend on government bailouts? My next question, Chairperson, would be, what would be the estimated timeline that the post office can provide to assure this portfolio committee that it will conclude the BRP process? And maybe what are some of the key hindrance factors that are still keeping SAPO within the BRP process? Chairperson, I'm also keen to understand that what impact assessments have been concluded or carried out to evaluate the operational capacity and the morale of those employees that remain within post office. And maybe adding to that, how does the post office plan to address the service delivery, the potential service delivery gap that were caused by those retrenchments? Maybe on the financial side, Chairperson, I note the decrease in the loss. And my question probably would be, in terms of the decrease in the loss, is there a genuine, real loss? Or is just because of scalability, the fact that we don't have this huge employment expense sitting on the income statement, we've had a reduction in the loss? Has there been an overall improvement in the profitability or in the performance, the financial performance of SAPO in terms of cost per service? Or is that loss, the reduction in the loss, purely attributable to the absence of a huge employment cost which has been removed due to the retrenchments? Chairperson, given the funding assistance that SAPO will be receiving from the Minister of Employment and Labour, which as a portfolio committee, we certainly welcome, maybe the question to ask then would be, how does SAPO plan to use the ease of this funding, given the fact that that funding is specifically for employees' salaries? It will free up working capital. So maybe the question is, how would they use this as a strategic opportunity, this relief as a strategic opportunity to energize operations and increase efficiencies. We noted that there was a decline in the investment in hardware and software, and we can understand that will impact on efficiencies. Maybe that's the question: how will we utilize this cash flow relief of the UIF TERS grant to really expedite and improve efficiency? And maybe lastly, to get an overall general view of, is SAPO improving? And that is really linked to my question relating to financial performance. Are we making a real financial improvement? Chairperson, if I can I only have two questions on the post office. The first is really to understand that there are certain KPIs that are indicated as not measured, and maybe just educate us in terms
you
of
mean,
what.
Honorable Subrati,
Sorry,
Postbank?
yes, Postbank. Sorry, Postbank,
Thanks.
Chairperson. Yes, so my first question there will be, there are some KPIs that are measured and not measured. In fact, they're not some. There are quite a few KPIs in the presentation we received that are indicated as not measured. Maybe what are some of the key issues that led to this, and have there been any safeguards introduced to prevent this from recurring? And maybe CEO spoke about. I don't know how to interpret this, CEO, but you spoke about the 29% performance in Q4 as an improvement, and that contributed to the 50% overall performance. Now, the question is that something to celebrate? When I looked at the presentation, and as the ANC study group, when we interrogated, I was aghast at the 29% performance. So where did we drop the ball? And maybe the next question would be, a link to that is, given the significant decline in non-interest revenue by 62%, compared to the prior year as outlined on page 30, and the loss of approximately 1 million customers due to SASSA verification process and card reissue delays, what specific measurable steps is Postbank taking to recover this lost revenue and customer base? And how does the bank plan to mitigate similar risks in the future, especially in light of the South African Reserve Bank variation notice restrictions? And lastly, Chairperson, on the SABC, my questions are largely around, well, I wanted to take a deep dive in the financials, but let me just have a look at what I've prepared here. Okay, so as far as SABC is concerned, the SABC has appeared in front of this committee on several times to cite subscriber growth of the SABC platform. However, Chairperson, there seems to be no correlation or input from SABC Plus to the advertising revenue of SABC. In fact, can we have clarity on this matter regarding how the revenue is generated from SABC Plus? Because when one looked at, and I must commend the license fees recovery, one noted that there was a significant or a good improvement in the license fees. Well, I was actually anticipating a decrease, and that was closely related to the increase in debt collection costs, which I think the CFO did allude to, better management of debt collection. What I'm not seeing happening here, despite us having 860,000 or thereabout subscribers to SABC Plus as an OTT platform, and this being a powerful vehicle to attract advertisers, I'm not seeing that impact coming through on the advertising revenue, which appears to be very flat. If not, I think it has actually declined on year. So maybe I want to understand how is that benefiting us in terms of revenue generation? Maybe CFO can explain to us what constitutes trade exchanges on the balance sheet. There is a mention on the balance sheet of broadcasting cost. Is the provider of this service Centec? I'm sure it is. And maybe what is the amount owing to Centec as at year end by SABC? And, what is the state of that debt, and how are we repaying that debt? Because we also have a responsibility to ensure that Centec on the other side is not compromised. So it's crucially important that SABC, we are taking into confidence is how is SABC managing the amount owed to Centec. I think CFO has explained what appeared to me to have been a disparity in the cost of permanent employees. CFO mentioned that there was I think it was an adjustment, a credit adjustment that made it appear that the 400+ million was huge increase. But maybe CFO, you might want to restate that figure and give us a better indication of what is the correct cost of employment compared to the figure that you've provided for March 2025, for the year in March 2025, rather than us comparing it to, I think about 15 billion was the comparative figure. I understand it's due to a huge credit of about 300 million. Maybe give us the actual figure so we can compare apples with apples. And lastly, Chairperson, is the unresolved 2024-25 salary dispute with organized labor has delayed negotiations for the 25-26. Now, given the SABC's financial constraint, what contingency plans exist to prevent further industrial action? And how does the SABC plan to balance employee demands with its fiscal realities? Thank you so much, Chairperson.
Thank you very much, Honorable Subrathi. Honorable Shongwe.
Thank you, Chair. Ngibingelele kuwe nabalingani bethu asisebenza nabo, honorable and
Arusibingelela njani ungasibhekanga?
Ngiyanibona nje Chair, mina ningiboni.
Asikubona, siyakubona manje. Thank you, Honorable Shongwe.
Ngiyabonga Chair, asithembe siyaphila sonke Chair. Chair, I'll be very short. I just want to understand into nje eyodwa enganelisekile kahle ngayo in terms of SAPO Chair, ukuthi on the audit performance yale 657 outlets. I want to know, Chair, how will SAPO ensure that outlets that are profitable, do they learn from the outlets that are performing? Actually, I'm trying to say, Chair, how can SAPO ensure us ukuthi lezi lama outlets are performayo la manje? How will they learn, or what are they going to do to teach lawa manye angaperformi ama outlets? Ngoba i-audit iphume ngaleyo ndlela le iphume ngayo. And again, Chair, I wanted to know we SAPO Chair ukuthi the last joint sitting between the Department of Social Development yenza a very, very serious threat ukuthi izokhipha isasa kwi-SAPO. So I want to know what have they done with that matter as from then to now after that serious threat. On the SABC Chair, again, I would like to take note ukuthi the two female CEO Chair, mina personally, they give me hope ukuthi South Africa is ready to have a South African president. They are seriously pushing lento enzima kangaka bayithole inkinga njengokwayo. But on the SABC Chair, I would like to understand ukuthi if ihlala sikhuluma ngayo ye-licensing, yokucollectwa kwama-revenues we-license, nama-mechanism wakhona Chair, how are they going to, they don't give me into ethi ebambekayo ukuthi how are they going to revise and review that thing and bayilungise futhi ibe isinikeze into eshoyo ukuthi how are we going to collect those revenues ama-TV licenses and to help i-SABC ukuthi be financially sustainable. I would like to take note and thank SABC for airing AFCON, the under-20, the final. South Africa ijabule kakhulu, basenzele into ejabulisa kakhulu Chair on that one. Again, Chair, on SABC, I was sent by the Kings. I met ama Kings wamandebele. They had a complaint ukuthi their language isiNdebele is somehow being diluted, and they feel what causes that is that the SABC, Ikwekwezi FM in particular, is no longer at Pretoria, is now Johannesburg. Now that ishaya ayingane zabo noma abantu abafisa ukuba nomthelela in the radio station and be part of the radio station, where those who have money can have access to go and maybe go for auditions or look for work or do whatever participation or do content that they will deliver SABC. But it forces them with on a mile, it can take 2-3 taxis to Johannesburg. Where else umuntu osuka kwaMhlanga, kwaNdebele and all those places can take one taxi at least to Pretoria. So they have a serious concern on that here, which it also hampers on the language. With the language will be diluted because people who are staying in Pretoria are not fluent Ndebele speakers as language is Ndebele khulunywa ngakhona emakhaya. So I said I would ask the SABC maybe to look at that matter ukuthi ibuyisele SABC ikwekwezi FM at Pretoria. I submit here. Thank you very much.
Thank you very much, Honorable Shongwe. Honorable Sithole.
Thank you very much, Honorable Chairperson, and thank you to the presenter for the presentations, because it helps us to understand the challenge that they are facing and the system that they are trying to use to actually to be out of this crisis that they are facing. Thank you very much, Honorable Chairperson. Honorable Chairperson, my first question to SAPO. I'm trying to check when are they going to fill up the CEO post, because it seems that it is actually acting CEO. When are they going to fill up that one, Honorable Chair? And the other Honorable Chairperson is the issue of workers. I think because they submitted. Because they have submitted their request to get 381 million from the insurance. It is the insurance, I think so. If that one, Honorable Chairperson, I'm trying to check, did they get any response? And how many workers are going to benefit from this actually from their submissions? And the other Honorable Chairperson is the issue of safety and security of workers that they are going to use. They are going to use the bikes, because you see if there is that issue of workers who are not working, and the other they are going to use the motorbike to deliver. If that one is been approved, it is going to have a big challenge around Chair. If that one can believe, they can look at that one very closely, because you see the security now is very sensitive. If that one can be actually. And then other issues on which Chairperson is the strategy to overcome the non-performance, because they are always crying of funding, constraint of fundings, but that's the crisis that we are facing, because always when they put their statement, they always talk about 3.8 billion, which they are still waiting from government to give to them. But it seems that if they don't get that money, what will be the way forward on that one, Honorable Chairperson? If that one can be clarified, because it shows that they are stuck. Their record has been stuck now. And the other now, Honorable Chairperson, to Postbank. How far with the changing of cards from gold to black? Because there is a complaint that the post office actually they are far from the Postbank, they are far from locations, they are far from where they're supposed to be. If they can give us the details of areas that they are using, Honorable Chairperson. And other Honorable Chairperson is the issue of failing to achieve their target. If that one, Honorable Chairperson, they can give us the strategy. How are they going to fix that issue of Because if you are targeting something, you have to achieve what we have targeted for. So now, if they don't actually do that, it will be a failing on their side, and the organization structure, because they did give us the organization structure. How far is that one, Honorable Chair? And how many new customers have they got from the start of this processes after this failure for SAPO? How many customers do they have now? And do they have any strategy to get new customers to bank with the Postbank? And to SABC, Honorable Chairperson, I'm worried about the financially constraints. If they are facing these financial constraints, and the issue of Honorable Chairperson, sorry, and the issue of SAPC too, because if you see radios, they are performing well, but if SAPC is not performing well, what strategy, what mechanism do they have to help the SAPC to actually do better than what are they doing now? And the issue of license, TV license, I'm happy that they are actually now getting some fund from that one. But do they have any targeted areas for SAPC, for the communities and the society to pay the SAPC? If they do have a system that can actually encourage people to pay for the SAPC. Likely I'm paying, Chairperson, I'm not owing. I don't know other members. And the last one is the issue of school transport. Not school transport, school sports. Have they have a team with the SAPC, with the basic education, to deal with the issue of sports? Because the issue of sport is very actually crucial and very sensitive, because if you do have a sports in schools, as we used to be, there's a lot of things, there's a lot of achievement that the country going to make through that program. If that one, Honorable Chairperson, can be clarified. And the last one is the cyber security strategy, if they can give the strategy of them. And when are they going to fill up the post for the CEO, Honorable Chairperson? And have they paid for this for the money that they are owing to Centec? Thank you very much, Honorable Chair.
Thank you very much, Honorable Sithole. We will take up the challenge that in the next portfolio committee, members must bring their records of TV licenses so we see who's paying and who's not. Honorable Bodlani?
Chair, those of us who do not owe will be ready to do that challenge. Chair, I think just to say we appreciate the reports and noting that they are preliminary reports, perhaps maybe just questions of clarity. I think for me, the first thing is when you hear that the post office is under business rescue, and then there is a report of a 1.8 billion loss. If they could just explain that to me as a layperson, how do you balance that? How do you explain that to the man on the street? I understand it's business expenses and whatever. Could they just go a bit deeper to explain that the 1.8 billion loss? And now we are sitting with 657 operational post office branches. Is this the end? Do they envision that they will close more post office branches? And currently, would they be able to tell us what is the radius, considering that so many branches have been closed, especially for rural communities? What is the distance between the respective branches that are operational? How far do people need to travel? And what strategies did they employ to communicate to those communities that the branches in those areas would be closed? So that's the question. And also the 657, what Honorable Shonga was asking, are they turning a corner of the 657, how many can we speak to that are profit making and how many are for social obligations? And we hear that the main revenue driver for the post office remains mail delivery. Are they up to date in terms of mail delivery? What is the backlog, if any, and what are the reasons for that? And if there are any backlogs, how do they plan to really speak to that? And I don't know, does the post office still deliver municipal accounts? Because for myself, I don't remember the last time I saw the postman outside my house, and certainly not the last time I received my municipal account from the post office. So what is the status of that? And Chair, obviously we cannot exclude the events that are happening within the environment of the post office, also with the temporary employee relief fund. We've seen in the media reports by the union saying this is not going to help the situation because people have been retrenched. What is the response of the BRPs to that? Because the unions are saying, why put in money when there's no personnel to pay that money to? And I think for me, the biggest question is, we know that there is legislation that governs what the BRPs would be paid. With this injection, which is something that was not necessarily on the table when the BRPs came over and took over the business rescue process, how do they then make their money as BRPs? I know there's a calculation that they have explained to us in the past. So of this money that was given by the UIF and Department of Labor, what would be the business practitioner's portion, for lack of a better word? And while we are receiving the work of the BRPs, I would have appreciated to say as they speak, because we all agree that this is not going to be a perpetual arrangement where you remain in business rescue as a South African Post Office. So I would have really appreciated some sort of saying, this is a build up to our exit, and this is how we are planning our exit. So I don't know if they could really speak more to that. I would really appreciate that. And is it my understanding that you are on track for the next audit cycle? That's how I understood it, if you could just confirm. What we've also heard today, Chairperson, is that the post office and the post bank have an inter-account. I don't remember the correct word, but they have a joint account for lack of a better phrasing of it. How is that being managed, considering the insinuations of the strained relationship between the two entities? And we really hope these engagements where you are pairing them, Chairperson, really helps the situation. So how is that being managed in the context of the post office being under business rescue? If I could get clarity on that. Chair, on the post bank, I really have to agree with colleagues. Post bank is sounding far better for me where it is now compared to when I joined the portfolio committee. So it gives a sense of hope, but there's also that acceptance that the environment that they are operating in is really saturated, depending on who you ask. Postbank does believe that there's still a market for them, but if like again, depending on who you ask. So just to really appreciate that there is that movement. Hopefully the Postbank will be able to bring in new customers. The CEO made a presentation and spoke about business from colleagues. Who is colleagues? Is this now sister departments? Do you have some sort of commitment from government organizations to say they will start banking? I know they will throw the Personal Information Act at me, but what is the commitment? Is it something solid? Is it ongoing discussions? Do you have a timeline to it to say at least by the end of this year, we are aiming at having X particular of government departments banking with us? What is the strategy there? Chair, when we went on oversight in the Eastern Cape, what we came across is that there were reports of employees of the post office who were forced to have post-bank bank accounts. And now the chairperson is also, the CEO is also speaking about encouraging employees of Postbank to have to bank with the bank. What guarantees can she give the meeting that people will not be coerced into having a Postbank account because they work at the Postbank? Because choice is a very important democratic principle for some of us. how are they going to ensure that people are not really coerced? People remain at liberty to choose whoever they want to speak with. And of course, we appreciate that if you are going to be an employee of the Postbank, of the post office, you will speak on behalf of that and become an ambassador, whether you like it or not. So, but how do we manage that so that we don't infringe on people's rights? Is the call center operational 24 hours? What are the operating hours of the call center? What is the capacity of consent with the call center in terms of how many people does it employ, and how effective do you think it has been up to so far? And what improvements are you looking at making to capacitate, especially considering that the people that do bank with Postbank, so how do you then interface with your clients in terms of the call center? And in terms of IT, can you confirm if SITA is your IT service provider? If not, why not? And also, could the Postbank also confirm if in the recent past they have had any security breaches, if at all? Chair, I'm not sure if I understood what the CEO was telling us about what they are trying to build with banks like Standard Bank and retailers. To an extent, I can almost understand with retailers. I did not quite understand what they are trying to achieve with reaching out to organizations such as Standard Bank. If they could just please address us on that. And on the SABC chairperson, I think to hear that Metro FM remains the #1 station in terms of performance and whatever, the question is, and revenue generation, how can we replicate that? And with an understanding that the audience that listens to Metro FM is a different bracket on its own, but what can be learned? Is it a management issue? Is it because they're more events oriented? Is it because they bring in the people who are, the celebrities of the day? What can we take from Metro FM and replicate across the other radio stations so that at least they come as close to what Metro FM is achieving as possible? You are reporting an improvement in TV license revenue. How did that happen? How did you do that so that you can build on that? And do you think it remains a sustainable model for revenue generation? And also, as well, you talk about people that are probable to pay their TV license. What methodology do you use? What informs that sort of thinking? The report says that you have 2254 government license accounts, and 224 has been handed over from the 2,254. You have 224 that has been handed over for collection. Does that mean that the other government organization departments do not owe you, or and what informed the handing over of those? And if it's necessary, if it comes to a push, I think you must name and shame to say there's government departments that are holding you back. You are providing a service and they are not paying for that service. So I would say you name and shame. And what is making the TV license on the website collections process more successful? Because you talk about a 16.6% increase. What about the website collection makes it successful? You have spoken to the Centec debt. Oh, you spoke about having a 35% market share on the news channel. That quickly took me to the issue that you have raised over and over as you have appeared before the portfolio committee about your outside broadcast equipment. How far are you with that? Is there some hope of you getting some outside broadcast equipment? Because I think that will also assist in improving your market share, and 35% is higher than I had anticipated. So I welcome that. But I'm correlating that with OB equipment, if you could assist me on that. And the CFO talks about shareholder support. I think this is a great opportunity to say to us, CFO, with all the financial reports that we have seen today, for you as the SABC, what does shareholder support look like so that you get through the next year and a few more years with SABC on its feet? Chairperson, I will stop there.
Thank you very much, Honorable Bodlani. Honorable Vilakazi, you'll be the last.
Thank you very much, Chair. Good morning to yourself and the colleagues on the call. Chair, I have to apologize. I have extremely bad connectivity where I am. In fact, I was losing many of the presentations as we went along, but I'll ask on the basis of what I heard and on the basis of what I read prior to the meeting. To start with the post office, I was just interested in, let me get my glasses. I was just interested in some of the financials. I see that sundry income, and again, this may have been explained. If it was, please just accept my apologies. My network isn't very good, as I've said. But sundry income is 16.4% of the total income for SAPO. That seems significant to me. And sundry generally refers to miscellaneous. But if something accounts for up to 16.4% of your income, it seems to me like maybe it's a reportable, kind of distinguishable, but perhaps not in this case. Can you just let us know what makes up the sundry income? What is the main portion of it? What does it consist of? The other thing there is staff expenses account for nearly 50%, for nearly 60% of expenses. It jumped out at me that this seems quite high, but I don't know. So I'd like to know from SAPO, how does this compare with best practice, or maybe with where those costs were when the post office was functioning optimally in times past? And is this sustainable, having such a high cost of personnel, and yet operations don't seem to be picking up? And of course, I'm all for keeping people in employment, but is it sustainable, or does this present the possibility of future retrenchment? There are 13 audit findings that still remain. Well done on whittling them down that high. Can you just give us an idea of what these are, these 13, and if there are any that we need to be particularly aware of that still need to be addressed? I noticed that the 150 million disbursement is put here as a drawdown. It's put against the targeted drawdown, which I assume that was from the National Treasury and ended up not coming. And these funds came via a different route. Is it a correct classification that they are a drawdown? Perhaps they are. Just clarity for me there. And then branches, we've always heard, this is the first time I'm aware of the number 553 with regard to branches. We've always been told that there are 657 branches, but it appears that 100 of them don't work and have never worked. So am I correct then in assuming, post office, that actually we don't have 657 branches? We would like to have 657 branches, but we actually only have 553. If you could please just clarify that for me. And on Postbank, I was covered by the colleagues. Just one more question is, I remember asking this question or hearing something along this when we were doing the oversight visit, but the partnership between Postbank and SAPO, I just want to know, is that still on? Is SAPO still, is Postbank still going to use SAPO for some of its outlets, or is that relationship over and the two are not going to work together going forward? And then in regard to the SABC, again, covered largely, but I just wanted to check with the chairperson or the CEO. I read an article recently that said it was last week, if I'm not mistaken, actually. Its point was that the 302 billion bailouts that was given to the SABC from 2019 and 2020, I think the rest of it was received, was totally wasted. I don't know if the leadership of the SABC came across this article, but it just gave me a start that there would be this perception somewhere in the public and amongst people who are interested in the broadcasting fraternity that have the opinion that the 3.2 billion was wasted. What is the comment of the SABC on that? And then I also lastly just noted that you were talking about the fact that you will improve your balance sheet through revaluing your assets. And then I just wondered to myself, isn't this a regular process? Does the SABC financial policy not dictate a period within which, or a frequency with which property must be valued and therefore adjusted on the balance sheet? If so, what is that period and has it been followed? Thank you, Chair.
Thank you. Thank you very much, Honorable Bodlani. I'm seeing the Honorable Vilakazi, my apologies. I'm seeing the hands of Honorable Shongo, Honorable Stole, and Honorable Bodlani. I assume those are legacy hands, no? Okay, Honorable Bodlani.
Chair, I do beg your indulgence. I just forgot to ask one question to the Postbank. Ubabukaya remains as an administrator. When are we getting out of that situation? I can't remember if that was answered in the last engagement with the Postbank. If we could just get an update on that, because it speaks to the governance of the Postbank.
Thank you. Thank you, Honorable Bodlani. Let me answer for him on that one. I do know that the Postbank board was inaugurated maybe a month or so ago, but they have since appointed a board, but I'm sure the Postbank will add if there's anything they need to add. Okay, so thank you, members, for your questions. I just have a few. The 150 million environment that Honorable Vilakazi spoke about, could we get a sense from the post office how that environment was utilized? You've obviously reported it, as Honorable Vilakazi was saying, as a drawdown. Where was that money directed specifically? I want to congratulate, I think, the post office. I think it was Honorable Bodlani who said that, it sounds, in fact, all three entities, they do sound a lot different than, they did at a year ago when we started in this portfolio committee. I specifically want to commend the BRPs on getting that provisional liquidation order discharged, the work that's been done there around the management of the debt of the post office. So what I want to check is that when it comes to the debt of the post office, the statutory creditors, and I'm assuming that also includes medical aids, pension funds, SARS, am I correct that an agreement had been reached to pay 8 cents to the rand? And if so, how far is that process? And do we have an intervention or, for lack of a better word, that we are making in that regard? DG, perhaps you can help. What reasons were given by Employment and Labor for only approving the TERS fund for 6 months and not 12 months? Because my understanding is that that fund can go up to 12 months. So was there a reason why, or a reason you were told why it was only for a 6-month period? Honorable Subrathi did ask the question around revenues. Like all of us, I'm obviously concerned about the revenue decline in the post office, but then what is the plan? Whether to diversify those revenue streams or to bring some of them back on stream, what is happening there? You spoke about, in your report, about income that comes from the Department of Home Affairs. Again, I think linked to the revenue stream question, have there been any overtures that have been made to any of the other citizen-facing departments to utilize the post office for some of their operations? Similarly, that question that was asked then by Honorable Vilakazi about the Postbank and its presence. while we appreciate that the Postbank would obviously seek to go into retail spaces and whatnot, I think that our view, and I'll say our view as a committee, would obviously be ensuring that these two entities are able to also feed off, support one another. So what is happening with regards to the location of other government offices as well as the Postbank in the post offices? You have quite a high number, a large number around trade receivables. Who owes you so much? If we could just get a sense of who your debtors are. I'm keen to find out what you mean around restructuring ops and logistics, which was one of your key performance areas, and linked to that, what that mobile and telemetry pilot project was. In that question, I want to know, are you compelled to own your own motorbikes? I mean, with the disruption of technology, with the advent of things like, all these delivery channels, whether it's Uber, Take a Lot, and whoever else it is there a need for the post office to expend money in owning its own motorbikes? Or have you considered that and you thought that yours would be a better model if you owned those motorbikes and similar assets? You also spoke about private sector property entities and that relationship didn't yield much. What did you intend there on that key performance area? And then I think finally on the post office, we did ask this question, I think, to the minister the last time he was here. I don't believe that the answer was very clear to me. The sub 1 kg exclusivity of the post office, has that now been extended? Is it in effect, and for how long? I also want to ask, sorry, just to the post office. Honorable Bodlani says something about municipal bills. I had a discussion not so long ago with the CEO of the Postbank because I thought this would reside with them, but it seems like it's a post office matter. When you look at your municipal bill, at the bottom there are payment channels. Apparently all the banks have to apply, but the post office has that with all municipalities. Now, that is, I'm told, a revenue stream that used to bring in excess of 1 billion rand to the post office. And those numbers seem to have dwindled to below, I think, 100 million or so. Would you happen to know what is happening with that, why we are not being utilized as much as we used to for the purposes of payment of municipal bills, and whether you have then looked at digitizing this and ensuring that you are able to send to customers of municipalities their bills on a digital platform that obviously then generates a revenue from the post office. I'd be quite keen to hear your views on that. On the Postbank, okay, you spoke about the variation notice and you said all conditions have been resolved. Could you please just clarify that statement? Because we've always understood that there was one matter which related to the card replacement that has not been finalized. So is it your assertion that you have now completed that? I think there was a question that was asked about non-SASSA client growth, but I also am just keen to find out what is the split in terms of the bank's clientele between non-SASSA clients and any other clients, and whether there's been growth in that regard. You made reference to it, but it didn't come out very clearly in your presentation. Perhaps the DG could speak to this issue of government support to the Postbank. What seems to be the challenge? Why is government not supporting the Postbank, especially through ensuring that some of its disbursement work is done through the Postbank? I am very skeptical or unhappy or whatever it is with the manner in which the KPIs and ultimately then the portfolio of evidence of the Postbank is captured. If you look at, for example, KPI 2.8, 2.10, 3.2, 4.2, you have outcomes like, so you would say, for example, on 2.8, you'll say number of new projects launched and or number of products discontinued. Then your target Then your target is an approved project rationalization strategy or framework. Then you deliver on that, and then it's said that you've delivered on that target. But in terms of what your output indicator was, all of these issues that I'm raising, they have framework strategies completed, but the extent to which you have managed to actually deliver on the output indicator is not clear. So if I could just have a comment on that and whether it is then resolved going into your new APP. On your interest income, what is the implication of how you are paid on the SASSA account by the National Treasury? Because I understand that the National Treasury or SASSA would draw down from the National Treasury and then they then send the money to you. Can you just explain how that agreement works and what implication, if any, it has on the income earned by the Postbank? And then finally, the 216 million rand, which was the cost of the card replacement project. Could you just speak to some of its elements? I think one of the members asked this. On the South African Broadcasting Corporation, excellent numbers, 1.49 billion, I think you said, lifetime viewership on the SABC YouTube platform. What has that translated into in terms of monetary value? So while we're speaking about the monetization of SABC Plus, how much are we making from our presence on the YouTube channel? The government debt. Oh yes, the government debt that you were owed as the SABC for TV licenses. I see that you're recording a number there of 2.4 million rands. Is that correct? Then it has decreased from 30 million, because I seem to remember that figure having been bandied about at some point. And let me join members who have congratulated you on seemingly turning around the collection around TV licenses. But I want to ask, when you budgeted for your TV license collection, I don't have the figure in front of me now, but I think you had 191 million as your budget. You collected close to 1.83 million, if I'm not mistaken. How much does that represent in terms of compliance? Because it's all well and good to budget to only collect 20%, So what is the shortfall and what is the current value of non-compliance in quantitative terms? I think let me stop there. And hand over to you, DG Gyani. Thank you.
Thank you very much, Chair, and thank you to the honourable members for the questions. And I think on this day, we also appreciate some ray of hope also coming from your side. And one of the members, we appreciate also the support that you've given us. So please to continue to still champion. I will just quickly highlight the issues that were related to us and then hand over to the entities for their responses. With regards to the 3.8 billion before for SAPO, which was part of then the application we had made for the business rescue. Until now, honourable members, as you would know, there has not been an allocation in this regard from National Treasury, despite the continued submissions and appeals and engagements that we've had with them. You would then obviously hear probably further on this or the silence of any allocation in the budget speech delivered tomorrow. However, we've then had to sort to look for alternatives in as far as to say what sustainability and partnership programs. In this regard, we have, as we had presented previously, we are engaging the DBSA. So they're helping us coming up with a future strategy. But over and above that, honourable members, because the strategy from the DBSA, they've now come back to us to say, because they're looking at it from a medium to long term, it will take about 12 months. We've then had to look for alternatives. So we are reviewing the current unsolicited bids that we've received from interested parties, and there are quite a number of interested parties who are really still confident in this far as the business of SAPO, and SAPO obviously serving as an e-commerce hub and platform for the country and connecting to the rest of the world. So in this regard, we are going to also go out as a department on a request for proposals working with GTech just to then augment and offset that. I'm going to leave the issue of the current financial status where SAPO stands for the business rescue, but just to indicate that as a department, we do engage almost on a weekly basis with them. And we are actually also quite confident in as far as the current financial status of the post office in consideration from where we're at. And this is also then giving us a future hope for a turnaround post office, which we are very confident that it is still relevant and it is definitely going to serve a much wider purpose in this digital economy era. With regards to then the question that was posed directly on the issue of I think the first question you posed, Chair, was the reasons for the approval of the 6 months by TERS, and I also want to really thank the UIF and the Minister of Employment and Labour for really also giving us the confidence and the national confidence as well. The letter that was sent from SAPO to the UIF specifically indicated the 6 months. The request for the funding, so the response obviously was on what you have asked for. So I think the post office in that submission, when we then inquired why 6 months and not 12 months, as you've asked, Chair, was that they were confident that some of the spin-off in as far as then their business is likely then to start getting in the traction within this period. They can further elaborate on this point. On the sub 1 kg exclusivity of the post office, just also again to allude to the fact that SAPO's license currently does stand. SAPO during this period as well made an application for then the renewal. So the exclusivity of the 1 kg still remains under the section 18 of the Act, and it will continue to exist until such time that the regulator has otherwise made a decision. The decision process on this application by the regulator, we have indicated that it is quite extensive, and they would obviously advise at the duly appropriate time for that. Honorable members, this can take up to about 18 months, and so for SAPO's exclusivity remains as such for that period. We're very much so well aware of the current court case and litigation, and obviously within the powers of the law and what then currently exists is what we would be standing firmly on, both as the department, the regulator, and the post office. With that, Chair, I would like to then hand over to the head of delegations for the post office, the Postbank, and the SABC to then respond on the other questions that were posed. Handing over to the post office first. Thank you.
Thank you, Chairperson, DG, honorable members. Good day to everyone. Thank you for the questions and the observations. We will attempt to answer the questions in groupings. I'm going to start off with the BRP, the statutory-related questions that were posed, to the BRPs and the management team of SAPO. And I think it's right, to commence with our discussion around the successes of the rescue. And I think that's been widely shared with the committee on previous meetings, as well as, in the media and so on. Yes, we're quite ecstatic with the most recent announcement of the TERS application being successful. As you're aware, the BRPs applied for that process previously, but because we were already in the retrenchment process, there were some criteria and so forth that had to be dealt with. Subsequently, we had dealt with that. We're very timeous with our application, and we are pleased that there was a recommendation, for the monies to be made available. I just want to confirm that no money has been received from the TERS as yet. We have signed the agreements and we've seen the announcements. And as this acting CFO indicated, we're hopeful that we can get the first tranche of that in June. Then, with regards to the presentation that was made and context, the Q3, Q4, and yes, we did highlight, the acting CFO did highlight, significant savings, reductions in costs, 2 billion rand approximately savings in costs, 1.4 billion reduction coming from staff costs alone. And yes, just talking to the questions that were posed by some of the honorable members, the process, if you recall, started in 2023 or the previous financial year, or the year before, sorry. And then the impact of the retrenchment was only seen now in this 2025 financial year. Obviously, there's a time lag that needs to happen. The retrenchment process was a long process. And as a result, you are seeing the benefits of that flow into the full 12 months year ended 2025. It was certainly difficult decisions, but the retrenchment was not, as you recall, was not the only aspect of the cost optimization strategy that the BRPs put into place. There were various interventions that were put into place, various streams that we worked on simultaneously, including trying to monetize on various aspects of the business, including initiatives to digitalize and diversify the revenue streams. That was a work stream on its own. And you'll see also, as a result, total cost savings. Some of these initiatives has resulted in cost savings. Then, if you could recall, when we joined as BRPs, our costs significantly exceeded our revenues by more than 250%. And again, the staff cost was a significant element there. Having received the benefits, I'd just note the comment that was raised by one of the honorable members. Sorry, I just forgot the name here. But he highlighted 60%, and is that sustainable? Is that the targeted staff to revenue ratio? And those are things that we studied in detail. We've researched, we've compared that benchmark against what other retailers are operating at, the banks, for example, even looking at comparing minimum wages and so forth. So there was a detailed exercise around that. Is it at the right ratio? Not really, because again, we've seen a very successful outcome where costs have reduced, but unfortunately our revenues have also reduced. And again, that's due to external and other factors, and factors outside of our control as well. So unfortunately, the revenue decreased, allowing us to not necessarily achieve the full gains that we were looking or hoping to get. So in regards to that ratio, the answer is no, but it is a targeted approach. The team, the acting CE and the team that's on the call will respond specifically on operational matters and what we're trying to do on the sales revenue and diversification aspects. What I do want to say though is that the digital side of the business is obviously a focus area to diversify revenues. And then thank you, DG, for giving us those broad comments. One of the aspects that the BRPs, or under our watch, we've launched the digital, in a partnership, we've launched a digital partnership or a digital platform to enable the submission of e-registered mail, e-registered letters. And that's the revenue line item that the CFO presented, that we've generated 1.5 million or just over 2 million. I can't remember the exact number. But that is certainly a focus area. That's one example of the digital diversification, and we're hoping to see that obviously grow under the care of management. The other partnership related to a property partnership, again where the CFO highlighted the installation of masts. These are cell phone towers or masts that sits on our owned, our SAPO owned buildings, and we've seen an uplift in revenue there as well. And then quite rightfully, the focus has been on government, government to government business. And that's a key aspect of our turnaround strategy. Now, unfortunately, to answer the question as well, we haven't seen as much uptake from other government departments. And, we've been in discussion, with a few. I think particularly the Department of Home Affairs, where they are renting some of our buildings. We've had discussions with them, constructive discussions, where we're looking, at that point, we were looking to pilot the issuing of passports at our branches. Those are conversations that still need to continue. However, just from a broad perspective, the uptake has not been good from other government departments for various reasons. And I think with the post office, Postbank relationship, that's certainly been a relationship we personally wanted to pursue and continue from the time we entered business rescue, from the time we joined as business rescue practitioners. Now, unfortunately, that relationship, has certain challenges. And again, we are hopeful that Postbank would partner with us because there could be substantial synergies or cost savings on shared infrastructure and so on. But having said that, the Postbank does utilize us for certain shared services. And I think, as alluded to by the comments earlier from that team, it possibly can get better. I think those are some opening comments. If I can then delve to some of the specifics that were raised, how do BRPs make money? What is the BRP's plan to exit? What's the BRP's cut of the TERS funding? I think just specifically to address that, the TERS funding is very specific. It's in terms of the memorandum of agreement. It's got a lot of conditions and rules that the post office has to oblige and comply with, and that's maintaining monies in a separate account. There's a clear client listing. We have under 6,000 staff members, and it lists each staff member and what portion of the TERS is applicable or payable to a staff member. So there's detailed schedules. There's very strict conditions that we have to comply with. Those monies will be ring-fenced and managed in accordance with the requirements and the rules stipulated in that agreement. The BRPs certainly do not take a cut of any portion of the TERS fees. We don't charge contingent fees. There is no cut or portion of anything. I just want to highlight that the BRP's fees are paid from operational cash flows, and therefore it's in the interest of the BRPs to make sure that the business remains sustainable, continues to grow. And again, we've highlighted or answered this question in previous meetings. Our fees are regulated by the Companies Act, and we are charging in accordance with that, which is an hourly based type of rate. So I think I wanted to deal with that whilst I had the floor. Estimated key timelines to conclude the business rescue process. Juanito will come in shortly just to explain again the legal aspects of that. I think from our perspective, there's been a lot of gains, but we still are not out of the woods yet. I do want to agree with our acting CEO. Cash flow still remains a challenge. Whilst we've had great improvement on the cost line, we've had some quick wins and some long wins as well, through the BR process. Our cost still exceeds our revenue. And as a result, it's a pity that there was no funding. And I know I do take note where Honorable Member Sitola said that Post Office is crying for funding. I think we should correct that. The Post Office is not crying for money. It's in desperate need of cash because of the fact that it went into liquidation 2.5 years ago. And that was by the making or design by the leadership then or people that didn't take decisions back then. And, so it's not fair to say that the Post Office is crying for money. It's in dire need of cash because of the situation that was created historically. And I think we are quite pleased with the outcome where we've kept, whilst yes, we've retrenched people, but I would like to say that we are pleased that we've kept under 6,000 people employed for another 2 years or 18 months in the BR process. So the non-receipt of the funding has certainly been a key derailer for the BR process. Had we received the money on time, I'm confident, I'm actually 100% sure, or 99% sure rather, that we would have discharged the business rescue months ago. But again, the circumstances have changed. There's new challenges. We are working closely with the DG and the department with that joint committee on the partnerships which they are trying to implement. Those are the things that we must be forward-looking on. Those are the breaks that we need, and that's what will help the Post Office then come out of the situation. So as we stand, yes, the entity is still a net utilizer of cash, and that's something that we need to watch because we are not out of the woods yet. But again, with the interventions, we believe that the Post Office can stand on its feet again in the future. Sorry, I'm just checking my notes here. I just want to correct. There was a reference made to a SAPO joint account between the Post Office and Postbank. I just want to confirm there is no joint account. We are two separate entities. The acting CFO will respond on that specifically shortly. And then just tying up with my comments around the exit of Business Rescue. Yes, unfortunately, with the funding not be there, we couldn't exit sooner, but we are working on a strategy. Obviously, it is dependent on various factors. And of course, the TERS certainly is one element that gives financial relief and that contributes to us being able to, and we are working on a plan to exit, because the intention of Business Rescue is for us not to be here forever. We acknowledge that. We are actively looking and that we are taking some legal advice on that, and we're hoping to deal with that decisively. I just want to correct also a comment by Honorable Member Diko around there was an agreement with statutory creditors to pay 8 cents. That is incorrect. There is no such amount. I'm not sure whether amount or where you got that reference from. We are in discussions with the 3 creditors that remain. If you recall, in terms of the business rescue plan, it was a condition precedent that once we receive the 3.8 billion, the statutory creditors would get an extra 18 cents. Obviously, that money is not forthcoming. We are engaging with these statutory creditors to understand their position as creditors and to see how we could, come to an arrangement. But we have not certainly agreed on any amount or percentage at this point. I'm going to allow my colleague Juanito to come in and help address some of the other questions before we then hand over to our Ops and CFO and Acting CEO. Thank you.
Thanks, Anush. Thanks, Honorable Chair. Just from my side, just to add, with regard to the issue of exiting business rescue that Honorable Subrati raised, we have been in touch with the department and DG, and it's now maybe 2 or 3 weeks that we've been talking around exiting business rescue. There is a session, Honorable Chair, next week on the 28th, where we will be discussing with this portfolio committee the exiting of BR and the issue around partnerships going forward. That presentation, I believe you will have today. There are certain things that we're still working on with regard to us exiting. Anush and I understand that our role is coming to an end very quickly. There are certain things over and above TERS that have happened that can actually secure the exit of business rescue. We believe that the uncertainty that business rescue creates in the public out there makes it even more difficult to actually attract the right partners to come in and partner with SAPO going forward. So we're working on a strategy. We're working with our council in terms of how we do it. Because of the huge public interest that's involved in this matter, we have decided that the only way that we can exit business rescue is through a court application to approach the court to actually give us consent to file substantial implementation in the matter. But there are a couple of hurdles that we still have to overcome. I think Anush mentioned the 18 cents payment to statutory and payroll creditors. We will be starting having discussions with them once we have certainty around how we're going to deal with them. Are we going to be able to pay them at once and make an offer to them in full and final settlement of the 18-cent claims, or will we be able to, as SAPO, pay them over a period of time? But those decisions haven't been made. It's all issues that we're currently debating amongst ourselves with management, and we in close contact with the department, as I mentioned. So we're working on the exit plan, Honorable Subrati. You also mentioned an issue around operational capacity. We have discussed this with the department as well. We have issues around the appointment of a COO in the post office, which is very necessary and very urgent. So we're working with the department through that. We also have our own sessions with management. We had one last night talking about how we reorganize the business. to make it fit for purpose and to future-proof it going forward. I think Anush talked around the TERS funding, and I just want to confirm the TERS funding is specific. We are actually opening up a dedicated account into which all funds will be paid that will go to specific, which is payment of employee salaries and benefits, 50% of them 50% of that for the next 6 months. I will let our operational team, Lenny, Fatima, answer questions around the branches and other financial questions that were raised. There was just one issue that I wanted to also bring to the fore. There's no union. There is talks of an external union that represents ex-employees. That union is not a recognized and registered union. It's not a union that's registered or recognized at SAPO at all. There are 3 unions at SAPO, DIPACO, SAPO, and the Communication Workers Union. We're in direct contact with these unions on a weekly basis. There's none of the unions that have not welcomed the TERS recommendation that has been made in favor of SAPO. So to that question, there's utterly no discord between any of the unions and SAPO. Then I think there was a question about the audit. I think Fatima and Lenny can talk to that. I think we're on track at this point in time. Lenny can also talk to the 150 million rand drawdown, how that was used. I think 2 days ago or last week, Friday, we responded to the department in terms of giving them full details on how that money was utilized. I think that's all from my side for now. I'll hand over to Fatima and Lenny, and any one of our members that are on this call that want to make a further contribution. Thanks, Chair.
Thank you, Manito Anush. Chair, through you, honorable members. Before I directly answer questions that were posed, I just want to take a step back. At the time that the business went into rescue, it's no secret we were in dire straits, and there was a provisional liquidation order, and there was a provisional liquidator that was appointed. And, the comment that, we are requesting 3.8 billion, that request is not, at the time that the business was put into rescue, there was already 2.4 billion that was awarded to SAPO, which we fully accounted for in terms of how we've spent that 2.4 billion. And, the affidavit that supported the business rescue, alluded to 3.8 billion. And so when you look at SAPO, the way the business rescue plan is designed, the way the turnaround strategy was designed, it was all designed around the 2.4 billion plus the 3.8 billion. And when the 3.8 billion was not forthcoming, it forced the BRs, to revisit their plan. And hence we're on that 18 cents that's outstanding to statutory creditors, and how do we discharge on that? But it also forced SAPO to readjust the turnaround plan, because a large part of that turnaround was dependent on the 3.8 billion coming into SAPO to enable SAPO to make a baseline investment and get it fit for purpose. So, that's the background that we need to consider when you think about, operations, when you think about, are we fit for purpose? What are we doing in terms of becoming profitable? How do we attract the right partner? It's always bearing in mind the turnaround strategy, the business rescue plan. There's a significant enabler that is no longer available. With that being said, the members rightfully noticed and acknowledged that, we do have a declining revenue base. But as we, deep dived into this declining revenue base, what we do know is that postal services, although declining, still remains very relevant as a post office's strategy, because we're not a copy and paste as an economy. So you have pockets of our economy and users that are still very dependent on postal services. And so it remains core to our strategy, but it doesn't remain our only strategy. And the need to diversify our revenue streams into your digitalization, into your public sector, government business is critical if you want to achieve a balance and be able to secure that revenue stream. So there is a strategy document which we did present to the PC, that talks about the diversification of revenue and how we envisage that diversification of revenue. Having said that, I'm a firm believer that you cannot shrink a business into profitability. So when you look at the 657 branches and the 6,000 employees that were part of the business rescue initiatives, so that's the size that SAPO, should be optimally. So it's not about shrinking the business into profit, and that remains a strong initiative from this management team. Inclusive of the BRPs, we're always looking at what do we do differently in terms of the revenue stream. So when we spoke about the 657 branches and their profitability, and have we taken lessons learned from the, the profitable branches versus the unprofitable branches? Again, it's not a copy and paste. Our branch footprint, 657 enables us to maximize our branch footprints to South African citizens. But, people walk into branches for very different reasons. And so when you have to do the comparison between your urban branches versus your rural branches, we can confirm today that our USO branches, which really primarily meets the social mandate, are not profitable branches. So it's about, diversifying the revenue stream in those branches and looking at what can we do there in order to get us profitable. But, a parallel work stream is working closely to see, is USO, the USO grant, is it sufficient? Today it doesn't look like it's sufficient, but, what's the optimal or the sweet spot in terms of a USO branch so that it can break even? And the urban branches as well, what type of diversified services do we need to offer to those USO branches? Today, 108 of our branches are profitable, but again, you can't copy and paste them across the stream. Now, the key in those rural branches is that government business and that service delivery. And one of the members, said, are we doing municipal services? We are. The key is to get our municipalities to pay us, on the accounts receivable. And it's always a challenge and a toss-up between do we want to generate the revenue and how do you collect the debt from the municipalities? What also we notice from our branch profitability is 90% of our profitable branches, they do the motor vehicle licensing. So that's a very good business for us. And we would like to enable them in all our branches. So the key here is to get the Department of Transport to be amenable to rolling out this motor vehicle licensing across all the branches. And then looking at government businesses and seeing what other service deliveries we can execute on. The BRP alluded to, the execution of delivery of passports. Home Affairs currently rents property from us. And, one of our other work streams is we do have a property portfolio, although due to SAPO's dire financial constraints, that property portfolio was not well maintained. So it's about getting the properties into, fit for purpose and thinking about how we diversify them and make them revenue generating, very similar to the property rental that we've done at Home Affairs. But in our, in our structure and, the capacity and capability that we require from a human perspective, that government employee relations or business relationship person is critical, and in terms of us executing our strategy for revenue diversification. One of the members asked, when will a permanent CEO be appointed? For me, it's a welcoming appointment when we go to market for it, because I am only acting in the role. I want the PC members to, appreciate that, SAPO has had high attrition over the years, not just the employees that exited in a Section 189. And what you see in the organization today, and it's a conversation that I'm continuously having with the BRPs. It's 6 months that I've been in this position acting is the skills drain that the organization has in terms of capability and what's required to get the business fit for purpose. So you have, the CEO role that's vacant. We don't have a chief operating officer. When you look at digitalization and where we need to go in terms of, being, the post office of the future, those skills space doesn't exist in SAPO today. And so we really need to look at how do we capacitate the organization with the right skills space, with the right leadership model to take it to the next level. But this was an advertisement for the board of directors, and I'm sure when they do come in, or the BRPs will look at, how do they capacitate and hand over the baton to the right leadership team to take SAPO to the next level. There was a question in terms of the motorcycles. Indeed, there was a proof of concept that we've completed. This exercise evaluated delivery efficiency against capital and operational costs. But once again, we need an investment, and we're no longer saying we need 3.8 billion from government. We would like it, but we need to revisit, this whole partnership model. And then, if we get the right partner on board, we can continue with the procurement, the training, the implementation of that. I also want to state, when you look at, it's not just about branches, it's about also our last mile. We deliver mail, we deliver parcels. Postmen and postwomen are multi-skilled employees. They don't just deliver the mail. They also assist with mail sorting. We have a significant mail sorting facilities. And so, it's about, not just thinking about, retrenching mail workers because the mail is a dying business. It's about repurposing our employees. Motorcycles is critical in terms of becoming more efficient. But as I've said, we would need that type of investment in the form of partnership. We do.
Fatima, we're losing you.
If we want to be relevant, the digital we need to operate in. And so is my video off then, maybe? Is it better without the video?
Yes, ma'am.
Okay, perfect. So in this digital environment, we've implemented and launched a, and support to e-communications registered mail services. We're looking at various digital opportunities. The DG has helped us, looking at our trust services and, executing on that. And before I hand over to Lenny to go through specific audit, questions and financial questions, I just want to reaffirm that, while it could be perceived that there's strained relationships between the Postbank and ourselves, we still value the Postbank as a strategic enabler to the post office as part of our government to government business. We've refined our relationship and we've improved on it. There's a service level agreements that are in finalization between both organizations. And in terms of how we contract with each other, it's no longer as haphazard and ad hoc. It's more defined. It's black and white. It's contractual. The accounts that exist between us, one of the members asked, it's really in terms of financial transactional accounts that are being reconciled on a daily basis, so that we don't find ourselves in the position that we were in the past with large unreconciled balances. The 1.8 billion loss that Honorable Member Bodlani referred to, that was the 23-24 financials. I just want the members to bear in mind that at that time, the business rescue was awarded, but was not in full execution. So when you look at the 24-25 results, those results realize the benefits of a business rescue, including, the reduced headcount, the compromise of the creditors. I will now hand over to the acting CFO, Lenny, to take specific questions on the finance side, and then Solly Gaba, who's our acting head of operations, on any operational matters. Thank you, Chair.
Thank you, Fatima. So in terms of the specific question that is raised to finance, which I'll try and cover quickly. One is the audit cycle for the 24-25 financial year. We are on track to submit the financial to the AG before 31st May, even though 31st May is being a Saturday, so we plan to submit by Friday the 30th May to AG. And the AG team is also on site doing their prelim work. The next question was in terms of the sundry revenue. In terms of sundry revenue, what are the key items in sundry revenue? They are non-core revenue items. One of them, we received a dividend from Ituba, 15 million rand for the last fiscal year. And then we also got, in terms of, as we indicated, our debtors book is sitting at 113 million. By reducing the debtors book, also given us the opportunity to reverse the provision that we raised for in terms of the uncollectible debt. So that's about 250 million. And then also we have this something called the fair value adjustment with the accounting entry in terms of the leases. That's about 80 million. So those are the three significant items that's included in the sundry revenue. In terms of the drawdown of the 150 million rand, we saw that drawdown was given to us around the 13th of March in the last fiscal year. We have carried forward a majority of the cash into the next quarter. That 150 million is utilized for working capital. That also is helping us in the first quarter ensure that SAPO is in a cash surplus position and able to pay the debt in the first quarter. We're also trying to address any deficit from quarter 2 to quarter 4. But in the first quarter, we are able to settle all the liability that become due. So the 150 million rand. It is a drawdown because it's a transfer from National Treasury Department to us. So we regard it as a drawdown, and those things will be capitalized where shares are issued to the department. So in terms of the debtors, question about the debtors, the majority part of the debtors of 112 million, a majority of the debtors is our bulk mail debtors, which pays about a month later. So in terms of the postal services, the parcels and the bulk mail, that's included in the debtors. We also have a portion of the international debtors, and we also got international payables, and those become due as the majority of the debt age analysis has been in 6 to 12 months. The last question then common finance was the audit findings. The 13 that show in progress. One of the significant items, I think the acting CEO raised this matter, was the going concern. The TERS funding of the 380 million will definitely help SAPO in terms of the going concern. But the other matters, the AG will look at SAPO's going concern in a period of 12 to 18 months, whether SAPO will be able to pay its debt. So that's one matter that's raising the going concern. There's also a matter of the non-compliance. SAPO doesn't have a board. There was not an operational audit committee operating in the prior year of the 23-24. That probably going to be repeated in the 24-25 because in 24-25, financially, SAPO didn't have a board. And in that case, also, there was no audit committee. There was also another audit finding on the KPI. So we're trying to show the KPIs, all the evidence is obtained and collated for the AG to auditing. And the others relate to more the accounting matters, which we'll try and address as we wrap up the 24-25 financial year. And the last significant item was on the suspense account that relates to when SAPO was doing the SASA payments, and that's also in progress. Thank you, Chair.
Chair, if Soligeba can please come in on the operational matters, thank you, that are outstanding.
Good morning, Chair, and good morning to the committee, and thank you for the opportunity. Our acting CEO has already dealt with quite a few of the items from the operational perspective. I will pick up on the ones that we haven't not covered as yet. There was a question on the municipal bills. Yes, we do third-party payments still for the municipalities. That is ongoing. Then in terms of the motorbikes, the motorbikes are just part of a broader strategy on the last mile. So we have a total strategy with regards to the last mile, and it's not a one size fits all because there are different elements. So we will still have a postman within the metropolitans or somebody on a bicycle. Motorbikes is very nifty in and out. You can cover larger areas, and then vehicles, obviously. And this is a streamlined strategy that you just don't have postmen. We don't really want to call them postmen anymore. they are part of that last mile delivery, whether he will be in a vehicle or motorbike. So the telemetry devices, as was referred to earlier on, those are quite critical in the management of the whole process to optimize, later on work out the best routes. And this is where the BRP colleagues did a massive POC and a good job about this and formulating the strategy. With regards to the question about the security, we are very aware of this. Motorbikes in certain areas, you're not going to send them in there, and we will have a plan for those. Then in terms of the 553 branches that is online, we need to realize that, you know, this figure is not static. It's a moving figure. It could be 600 or it could be 610. We do have house breakings. We do have theft of especially copper, where thieves come and steal the copper wire, and then that branch would go off the network. So you know, you don't get it fixed within 24 hours. We need to go through our SEM processes. Eventually it comes up, but then we get knocked at another area. But I can also confirm that this is improving. We have implemented alarm monitoring, and we've had some successes. So soon that figure will be a lot higher. Then when it gets to the service delivery standards or the backlogs, I just checked the actual figure for April. On day 8, we've achieved 94%. That's of all categories of delivery of mail. We don't have mail in our system older than 10 days. Our delivery standard since December has been averaging 80%. And we're coming from a low of about 25% last year in April. So with the intervention of the BRPs, we have stabilized operations in the post office. Obviously, it's not where we want to have it, above 92%, because those depends on the frequencies of vehicles, and then we got to put more cash in. So at the moment, the operations has been stabilized, and we are seeing more and more improvements as we go along. So as I mentioned, you won't find letters older than 10 days in the system, and those would only be in the outlying areas where we need to send teams out to go and deliver. Then just another add on to the branch network. So the branch network is not to say that it equals the delivery network, because out there we can reach the whole country. So apart from the 657, we do have standalone depots that increases the reach out there. So I just wanted to add that. I think I've covered the service delivery standards, and I think acting CEO, the other one is about the restructuring of the ops and retail. Now with the assistance of the BRP, we have embarked on a process where we looked at duplications in the system, and we found quite a few positions, like supervisors, that can take on more than one task. So those things were streamlined to get a more simplified structure. And it's in the final stage, and it will be soon be concluded. Thank you, Acting CEO, and thank you, Chair.
Chair, the one question which, looking at my notes, that we didn't cover was the question on SASSA grants. Whilst we do some execute on some limited transactions for Postbank, we don't execute on the major SASSA grant execution. Having said that, we are working very closely with Postbank in terms of, you know, the future. If there's any way we can, be part of the service delivery, but again, it will be, subject to a service level agreement and, sharing of risks. So if there's anything further on SASSA grants, Postbank can come in on that one. Thank you, Chair, members.
Thank you. Thank you very much to the South African Post Office. Can I invite the Postbank?
Thanks, Chair. I'll be quick as usual. I'll raise 4 things and then hand over to CE and CFO. One is just to confirm, Chair, what you did raise about the board being in place and since mid-March, and we've put in the board committees as well in place, so that it is part of the issue has been attended to, and we are continuing to then engage as a board on some of the priority areas of Postbank. Also, just to thank the committee for all of the recognition, the kind words and recognition in the areas in which we have made progress. Obviously, also noting that the committee has correctly held us to account in the areas in which we faltered, but we do appreciate the recognition of those areas where a movement forward has been exhibited, and we undertake that is the tendency that we want to highlight to the committee and to the country, the commitment we want to make to the country, that we will take the bank to where it needs to be. And I think some of this is evidence of the momentum that we have. Then the second point, Chair, is about the key performance areas, and I'm gonna just add this much. There could be additions on the thing. From a board perspective, we have made the point in this manner, Chair. There have been objective constraints that we have recognized and acknowledged as the board, especially on the regulatory side, but also on the capacity side, where we've had to reassign capacity away from APP specific work to the work that had to attend to the regulatory matters as they have emerged, and they had become urgent. So we've noted that, and we think that objectively is something that we can state. But at the same time, I think we've made a strong point to management that there are areas where we could have performed better and we should perform better on. And so that's the approach that we have as we exercise oversight, Chair, at management, to say we will recognize objective areas, but at the same time, we will push that when things need to happen and they haven't happened, we will hold people to account on those areas, and we expect to be held to account on those areas as well. And that's the issue. So that's the point I will make in relation to KPIs. I've also noted suggestions around how we should improve even the way we construct the KPIs and monitor them. And I think that point is fully noted, Chair. From the board perspective, we are believers in results-based management approach and not just compliance reporting. The third point, Chair, is relating to the variation notice, and I think C will say a bit about it. Obviously, this has been a major factor, and we've had to prioritize this as the deadlines approach, because it had existential, implications for the bank. Even as the new bank has come in, it's one of the first areas of work that they've had to deal with because of its existential potential. And we have made progress on the matter, Chair, but obviously the regulatory matters have been complex, and the need to engage with the regulator has had to be prioritized above other things because of the implications. We have made progress, Chair, and I think C would say a bit, and I know there was the matter around cut replacement. I think C will talk to it, which was the outstanding issue from where we saw matters and whatever. But we in the process of this enhanced engagement, Chair, we have improved our relationship and our engagement with the regulator. We're quite comfortable that we're on an upward trajectory in the way that we are engaging, and we're hoping to continue to be, because we aspire to be a trusted and a compliant participant in the national payment system, in the national banking environment, like all other banks. And that's what we strive for, and that's what we really are in becoming and have become. In many instances, we've become a bank that we think is trusted, not just by stakeholders, but also by the regulator. And the engagements that we've been having with the regulator have served to clarify certain things that we know have not been clear for a long time. So this is continuing, Chair, and we hope to deepen the relationship as we go. But from where we sit, Chair, we continue to believe that the business case for the bank exists, the market for the bank exists, and the bank is critical. The success of the bank, commercial success and developmental success of the bank, is critical for financial inclusion And we think the bank achieving its mandate for financial inclusion is important to inclusive growth in the country. And there are benchmarks in other countries that show the role that a state bank like us can play in promoting inclusive growth in the broader economy. The last issue I will raise, Chair, on my side is about the partnership with the Postbank, and I do agree with the acting CE both to say that we have an ongoing relationship, but also we are discussing about how to relate, because that's been the source of the problem that has happened. Our approach to the issue, Chair, is that it's not the issue of SAPO. Postbank is not dependent on relationships, personal or otherwise. It's dependent on the business case. And from where we sit, we approached it from the perspective of the channel strategy. And in terms of the conversation we're having about our channel strategy, there is a role for Post Office, but based on the matters being sorted out that acting CE has outlined earlier on. Thank you, Chair. Let me hand over to our CE and CFO to deal with the other matters. Thanks.
Thank you, Mr. Ngema, and thank you, Chair. I will deal with the questions in groups. I think they are aligned and just in themes. I think the first theme was on the APP in terms of the APP and what we reported. And there were some questions relating to that. Maybe starting with Honorable Member Subrati on the APP. No, the APP does not. We're definitely not celebrating 29%, Mr. Subrati. Absolutely, that's not a good performance. I think as we were sharing, we were saying Q4, the requirements or the items that we've put in for Q4 in terms of the KPIs were not met, only 29% was met. But as overall, in terms of performance, we quite happy that we recovered for the annual performance as we end the year at 50% overall. Just maybe for how the APPs are done, you have an annual delivery, and part of that delivery is broken up into quarters in terms of what will take to deliver this annual performance. And sometimes you miss the deadline in terms of the quarterly delivery, but then you catch up on it, and then on an annual basis you end up delivering that. So that's what we were saying. And again, we're not celebrating 50% because definitely we want to go to higher than 80%, up to 90, 100% in terms of our performance. But we were just sharing that we're happy that at least at an annual basis we're able to catch up even on some KPIs that we might have missed on a quarterly level. And then there was again the APP, the questions around. I think the Chair touched on the question that you raised, Chair of the portfolio, around how we put the measures. We'll definitely improve on that. We take that sometimes they can be confusing, and I think it is a learning from our side as well in terms of how they prescribed to be put in place and how we just need to find ourselves in that manner. But definitely that's why we have audit that actually checks on whatever we've put in and whether we achieved on it. So even though they might be confusing at some point, we always have audit checking that did we achieve what we intended to achieve and what we wrote down. So at least that gives that comfort. And then other questions around the APP, I'm just checking my notes, that there was again from Ms. Godani around colleagues, what was meant in there, and whether the staff and whether we're forcing them to take accounts. Absolutely not forcing staff to take accounts. It is an ambition that we have. Like every bank, if you work for that bank, staff is normally the first people to take the account, but we will absolutely have no legal right to force anyone, but we want to present value-added products for staff to want to bank with us, because then they become the ambassadors for the bank as we build our brand. It's part of the total brand renewal strategy. And again, the question around, so I'm not sure the colleagues was also referring to government businesses that we're talking about, but the government businesses that were targeted in the previous year was NSFAS and the EPWP, which I shared that those were the meetings that we've had. We've met with their deputy ministers, even with the help of the ministry. But in terms of the conversations, especially I think with NSFAS, as they change leadership, we start the conversation, we move, we seem to be coming to something and then it drops because then there's a new leadership who they need to review and decide. So that was what we were really sharing around. Perhaps that's what Ms. Bethana, around the colleagues that we're talking about, or it was actually the staff colleagues. And then the second, or the variation notice, again, on the APP, what are we talking about? There were two measures on the variation notice that we put on the APP. The one was that did we meet the compliance of what was required on the variation notice for us to produce a compliant card and ensure that there are capabilities for beneficiaries to come and collect the card. Absolutely 100% we did that. And I think there was also a question on many sites. We're sitting currently with over 350 sites nationally for people to come and collect their cards. But did everyone who was supposed to come and collect their card come through? No, not everyone came through. And I think that was the question for there's another question as to where exactly are we? We have now swapped 70% of our customers who were supposed to come and collect their black card. But in the conversation with the Reserve Bank has put that end of March, we needed to take a stand and stop, well, they gave us a directive to stop issuing any new cards, but safe to say that no beneficiary is left with no cards. Those who are using the gold card can continue to use the gold card. That's the agreement we've had with the Reserve Bank. And those who are using, who already have the black card, the 70% that is operating on the black card, continue to operate on the black card until the conversations that we're having with the Reserve Bank on the way forward are completed. And then the second theme, I think, of the questions that I received was around the relationship with SAPO. I think the chair touched on it. Safe to say, I think from a Postbank point of view, by the way, we've given, I think we have about 3 or 4 services that we're receiving from SAPO. I think the SAPO colleagues can perhaps comment, because we have received notifications, I think 3 notifications in the last 3 or 4 months that they can no longer provide those services for us. One of them was in HR, one of them was some services that they provided for our beneficiaries in the SAPO branches. So it is not because Postbank does not want that relationship or does not want to use SAPO branches. Where we can, we are using even the SAPO head office, like I said, that they provide payroll for us, but we have received a notification from them to say they've given us a notice that they're stopping to provide that within 6 months. So, like I said, maybe they can expand in terms of the difficulties perhaps they have in providing those services. But it was not because Postbank is not doing that. I think the other question around joint accounts was answered around the relationship with SAPO. The third theme was around customers. What are we doing? Customers, how many customers do we have? Are they growing? Are they declining? What are we doing to retain or make it better? I think I touched on some of the things that we're doing to improve customer service. Perhaps let me start on the numbers of the customers. Numbers of the customers have reduced on both sides. Those we call core customers who have savings accounts with us, and the SASSA customers. I think I gave some explanation in terms of the reduction of SASSA customers, which was two-pronged. One was the work that SASSA did in terms of verification of customers, which meant that overall the SASSA customers for SASSA reduced by over 5 million, and of that 5 million, 2 million came from Postbank. The 3 million came from other banks. But also as part of the card replacement, we have seen some customers deciding to move to other banks. How are we planning to improve that, and what is the work that we're doing that? I think that for the longest time in Postbank, the customer experience has never been a focus in terms of improving the customer experience. It has been a horrible experience that we're giving to customers. And that's why that you see in our APPs, there's a lot of focus to do that. One of them was, I think, the question that you asked, even Chair, in terms of products. The rationalization of products that we're doing is not only to give new products, but also to stop products that have no meaning whatsoever to the customer, that is giving bad experience to the customer, but also loss making for the business. So that's part of the rationalization work that we've done. As part of the rationalization, we're also improving of what is contained in the product. As shared before, that we're talking about value-added services. But again, I need to mention that especially on the SASSA MSA, there is the limitation that we cannot provide any more for the SASSA customer in terms of value-added services or any improvement on the product, because the SMA limits that the SASSA customer can only use that card for one thing and one thing only, to receive the grant, and then that's it. That is a conversation we are having with SASSA in terms of improving that. The other thing that we're doing to improve on the customer so that we retain and stop the bleed where we're seeing on customer experience is improving the channels, because our customers have been struggling in channels. I think Ms. Bodane asked, what is the discussions that we're having with Standard Bank? That is something that we're talking in terms of channels, and the only reason we having that discussion with Standard Bank now, because remember, Standard Bank is our bank, so it makes it easier if a customer deposit with us to go to a Standard Bank and deposit into that account, as banks will do it with municipalities, that they have an account that you can go pay your municipality. So that is the capability that we're trying to open with our customers, because currently they do have to go to a post office and for depositing of their savings, and they withdraw all of the savings. So that's a conversation with Standard Bank that we're having, simply because that's a service they provide, and also because our money sits with us, so it's easy for them to link quickly when someone comes to deposit in a Postbank account, as you would do when you go deposit some money to a family member, but you go to a branch, and that's really the capability that we're talking to Standard Bank about. Other than that, we are improving the channels. As we talked about the channel, even the call center, as that was as part of improving the customer experience. The call center, yes, we have finally we have a proper call center, that is a call center line that you can dial into, that can redirect you where you dial into, that can collate the information of who called and keep that auditable information, so that we can measure what queries that customers are coming up with. And when we see repeat, how do we improve that? Because that didn't exist at all. No, our call centers are not running 24 hours as yet, because as we see the calls, there's literally no need for now, as we now have the analytics capability, we monitor that. So that is not the plan for this financial year. They run up until during the week, they run up until 5 o'clock, and Saturday is also open until 3 p.m. We do see that most of the calls that we receive are between 10 and 3 p.m. It actually really gets quiet after that. And the capacity, as Ms. Bodane has also asked, the capacity of the call center, we're sitting currently with 38 agents. We are recruiting to move to 46, which we believe is the right capacity that we have, as you have to manage that you're not sitting when people are idle on that. And then the third theme that's around customer. And then again, there was a question around just maybe on customer, what are we doing? Why do we talk about competing with other banks? I think this came even, I think the portfolio committee rightfully asked us and said, when a customer needs to bank with Postbank, they need to see their value. It shouldn't be that they're forced to bank with Postbank. So that was within that context to say everything that we're doing, improving customer experience, improving the products that we're giving them, working on value-added services for the customer, is to ensure that we are competitive. Because as much as there's still very much a business case for a state bank, absolutely, because currently, as the stats will tell you, 70% of adult South Africans have a bank, but most people, they use that bank as a post box. They just get their salary, and then once the salary is gone, they don't use it. A normal way is regarded as a normal proper engagement with the bank is that at least 3 times a month you should engage with the bank, whether digitally or physically, and then that will be regarded as a proper engagement with the bank. And most South Africans don't do that. Most South Africans don't have access to quality products that really change their lives. And we're talking about home loans, we're talking about insurance, we're talking about cover for whatever they've accumulated in terms of insurance, and ensuring that whatever they lose, they don't necessarily lose that should they have a fire, but they have a cover that covers them from that perspective. We talk about accessibility. Most South Africans, one of the reasons the card distribution was such a challenge was because people don't have access to what we regard as normal banks. We still have people in the most rural areas that don't have access to banking. Hence, our strategy is slightly different from most banks, in that it's not necessarily a brick and mortar, but it's a retail partnership, because the retails are also there, because it's also cost effective for us rather than building something and yet you only have about 4 people that actually show up a day, and yet you have to pay for the full hour. So that strategy is to really improve banking within South Africa, which is still something that is we still have underbanked. We still have people that are totally not banked in South Africa. So that also answers around the customer and what we're doing. SASSA payment, I think the chair shared, or maybe let me share a little bit. The SASSA payment does not come to us, absolutely does not come to us. The National Treasury pays, I think, SASSA through the Reserve Bank and then to SASSA. SASSA only pays to us what is due that month, and that is literally days before the customer comes and collects in their account. So in that sense, we don't necessarily sitting with the total SASSA annual budget, for instance. And no, we don't use CETA, which was another question, and I'm answering this under the SASSA relationship. We only have one service that we use with SASSA in the disbursement of grants, because the SASSA gives that file to CETA, and CETA passes that file to us to ensure security of the file encryption, because we don't interfere with the file. If SASSA says pay 5 people, pay them 10 rand each, that's exactly what we pay. We don't interfere. And the intervention of CETA in that process is ensure that the security of that file is proper. The reason we don't use CETA as a bank is because CETA currently does not provide any IT services to bank. It's not because we don't want to use them, but it's because they currently don't provide such services. We've had this discussion, by the way, with CETA on that, on the openness on that, and the discussion on that. And then the fifth theme were just other queries on operation. I think I've touched on them. Chair, you asked on the project cost, I think, and maybe that's the only one, and then the organizational structure, and then security bridges. Those are the 5 things that perhaps 3 things are put on other. So maybe let me talk about security bridges. No, we have not had any security bridges in Postbank. Our black card, for instance, has been stamped by both Visa and even the Reserve Bank is allowing that card to work until expiry date. So there is absolutely nothing of security bridges. Hence, we regard ourselves that we've met all security, all compliance requirements as per the variation notice. The other question on organizational structure, I cannot quite recall what the actual question was. Excuse me, Mr. Sitole, because I know that it was you who asked. It's safe to say that we are in the process, though, of improving our structure. We are in the process of going to board with the new structure, because the current structure that was approved in 2022 is not at all a bank structure. It's not aligned to the strategy. So we have reviewed that. We finalized that process as executives, and we're taking it to the new board. And of course, as part of governance, we're taking it to the HR committee and then board, and then the concurrence that will happen with the ministry. So that's what we're doing. And then there was also a question around what was it, around 5 now? Oh, the question from you, Chair, I think your question was around the budget around the project. What did you spend it on? Most of that budget went into printing of cards and buying of the new card, because I think that's the biggest cost. The second biggest cost that I can recall was all the IT changes, because remember, the reason Postbank was not compliant as per the Reserve Bank in terms of the variation notice was not only the card that you see, but where that card comes from in terms of ensuring security and the background, ensuring the systems, the core banking systems are working, ensuring this compliance in the switching system, ensuring that we are in the compliant data centers like tier 4. So all of that work was part and parcel of the variation notice and the work that we've done. And of course, another cost was putting the 350 plus sites that we've put in the retailers, in ensuring that we have a site, and of course the labor to support that site. Those were the major costs within the project that we spent on. I think, Chair, those were my questions. If I've forgotten any and I haven't noted any, but I don't think so. And I'll stop there, Chair. Thank you so much.
Thank you. Thank you very much, CEO. Thank you, Chair. We've totally run out of time now. SABC, I know there's a lot of questions to you, but can we please try and make it tight, because the MPs need to go to the House, I believe. Chairperson, SABC?
Okay, thank you, Chair. I will try and be very, very short. I'll only take 3 questions, Chair, of what has been asked, and leave the rest to the CEO and the CFO. The first one was from Honorable Sithole around the appointment of the CFO. I just want to indicate quickly, Chair, that the process has started, the position has been advertised, and the shortlisting and interviewing will be happening. The timeline that we're working with is end of June, 30th of June, to finalize that process. Then the second question came from Honorable Bodlian, directed to the CFO around shareholder support. Just quickly, Chair, I would put what would be shareholder support maybe into categories. What we think is direct support that can be provided, and what we think can be indirect support that can be provided. Just on the direct support, we think that the alternatives of what can be done. The shareholder can assist with funding the public service mandate. We have presented to the committee before that the public service mandate costs us around the tune of 2.3 billion per annum, and just about 7 billion in a 3-year period. And this is, Chair and members, on the back of the failing TV license regime. Because of that shortfall, this public service mandate remains unfunded. So a direct intervention of that shortfall would be adequate shareholder support in our view. The alternative is that the shareholder can consider granting interim funding through the MTF process, wherein we say until such time that the SABC bill is finalized with a sustainable funding model, there is a direct intervention. Again, we think that if the target can be on the public service mandate, the SABC can be able to operate optimally and compete fairly in the market. We also think fundamentally, in relation to the 2 points I've raised, Chair, that the finalization of the SABC bill is an issue that is more than urgent. We think that that process needs to be finalized with agency, and that as it gets finalized, it must include a sustainable funding model for the SABC. We also think that the finalization of the white paper on audio and audiovisual media services and online safety content should be finalized, because we think it can help in policy positioning, which can even the ground in terms of how we compete with competitors in the market. And we think that if the exemptions of certain provisions of the PFMA can be made permanent, that can assist greatly. On what we think can be indirect support, Chair and members, is that We think that if government could find a way of encouraging government departments to spend their media advertising and marketing budgets through SABC platform more, that can also assist in alleviating the financial challenges that the SABC is facing. We think that if National Treasury can be open to providing the guarantees to allow us to go and engage in the capital market and raise capital to plug the shortfall that we need in order to address the financial challenges that the SABC is faced with, that can be very, very helpful. And we think that if we can be also assisted in accessing the USASA funding that is available for universal access, just to assist us to cover the distribution costs, signal costs. We think that can assist. So I think maybe at a very high level, and in the interest of time, I can leave it there just to give the committee a sense of how we see that shareholder support panning out. Let me conclude, Chair, by speaking to the question that Honorable Vilakazi raised around a media article which said that the 3.2 billion that was granted to the SABC as a bailout was a total loss. We, as much as we accept that the SABC has not necessarily, turned around beyond that contribution by government, we don't think that it was a total loss, and this is briefly why we think so, Chair. In that 3.2 billion, 1.4 billion was used to settle the creditors that the SABC owed at the time. And about just over $500 million of that went to Centec. So if that intervention didn't happen, we probably would be owing Centec somewhere in the north of 1.5 billion as things stands. But if you just look at the under billion rand of other creditors that we owed at that time, probably the SABC would have been liquidated by now if that intervention did not happen. And then 600 million of that money went to CapEx. As much as that was a drop in the ocean, if you look at the backlog of the CapEx that needs to be replaced and maintained within the SABC, it did help to keep the lights on. Those small interventions that could be achieved with that 600 million did help to sustain us and to keep us on air to this date. And then lastly, 1.2 billion of that went to content, and probably this is where more one can say probably a little bit more could have been achieved in terms of the content that had been acquired being more compelling and having attracted audiences. But it's also an area that even ourselves as the board were looking into deeply to properly understand why the content that was acquired did not necessarily translate into audiences and therefore revenue. So I think, Chair, in the interest of time, I'll leave it there and hand over to the CEO and the CFO to tackle the other issues briefly as well. Thank you.
Thank you to the chair of the SABC. Honorable Chair, I'm just going to come in to speak to some of the matters, and the acting CFO will expand on the financial questions. Just starting with the TV license collection, I think although we're seeing a positive, outcome for the year under review, but the reality is that only 19% of South Africans are TV license holders and are compliant. The reality is that the majority of license income comes from people who've been paying previously. Most people who buy new TVs are actually not paying, so we are not getting income from new purchases of TVs. The law says that if you have a TV, you must pay a TV license. However, Chair, the enforcement mechanisms are very limited. Hence, the proposal from the SABC in the SABC bill that's asking that better, more relevant funding models must be developed, and that funding model must also be implementable, because even though currently we have the TV license regime that's no longer, fit for purpose, the implementation is also very critical. So that's very important. And I think the question was asked in terms of how much we are receiving, how much should we be getting? In terms of some of the forecasts from a market perspective, they go all the way to around 5 billion rand in terms of license fees. I mean, that's also obviously depending on the changes that are currently taking place with more people moving from traditional television to digital platforms. That number is likely to change if the license is based on its current prescripts. SABC2 performance, the question was asked about SABC2. The reality is that from a prime time share of television screen ratings, SABC2 has experienced a small dip from one quarter to another. In Q3, it was 3.19%. In Q4, it dropped to 3.1%, 10%, and the annual target was 5%. But I think what's important is for us all to understand that this drop is really attributed to a high repeat ratio. So because we don't have fresh new content, we have to repeat existing content, and so we have that lack of fresh local properties that are a key driver of South African audiences. But we've mitigated that because I mentioned earlier that come August we are launching a new telenovela called Pimville on SABC2, and we based on that we will be really driving that audience share back to SABC. We're working hard to ensure that the script are relevant for the audiences and that the storyline is going to be able to effectively do what we needed to do. The other question was asked about Metro FM. The reality is that Metro FM is South Africa's biggest commercial radio station, English language radio station in SA. And there's a lot that is due to Metro FM's success, and I'm not going to get into it. But I think what's important as well is that ALS still commands large and loyal audiences. However, it's important to understand that advertisers don't just buy languages. They don't buy language segmentation. They look at far more deeper segmentation, and this is where the challenges, we face some challenges. But what's important is that we now have this new operating model where there is a deeper focus on radio sales. So we're building that radio sales capability where previously everybody was selling everything, but now it's a more focused sales capability with deeper market and audience understanding, which importantly is going to be underpinned by digital and data fluency, because that's what advertisers are buying. We're now living in the world of an audience of one, not an audience of a million. And then then in terms of the question, I think it was from Honorable Podlani about the outside broadcasting units. We have a CapEx strategy that we are really driving. The CFO and myself are really anchoring it. And I think what's important is that outside broadcast is not just only for news. If you look at just sport, for example, if you're watching a match on a Saturday, to bring that content into the household, it's those outside broadcasts. And SABC is in the market for funding for our CapEx, and part of that is actually updating the OB units because they are very critical for the sustainability of the SABC from a technology perspective. SABC Plus, Honorable Member, I think you mentioned the performance from a revenue perspective from financial year 24 to financial year 25. Just for clarity, is that in financial year 24, that's not a sales income. It was a payment from Telkom One, which was a payment for content carriage fees, because previously we had a partnership with Telkom for the OTT streaming platform. So with us moving from that partnership, Telkom made a payment of that amount that you see there. But it's important for me to say that we are currently building a competitive digital sales capability, which will be anchored by the recently appointed head of digital sales, who brings in a lot of digital sales experience. Because in this era, what's interesting, Honorable, is that OTT streaming platforms, by their nature to be successful, they are all behind a paywall. Whether if you look at Netflix, Amazon, etc., none of them are free like SABC. So we need to go back and remember the public mandate, which even the chair was referencing. The public mandate demands universal access. So the OTT streaming platforms, the successful ones, the money comes from actually the monthly subscriptions. So what we are doing as SABC is we're looking at different revenue streams for the OTT streaming platforms while still delivering on the universal success requirement for SABC. But what's important is that we are building that digital sales capability, whereby what we're also doing is that we're in the process of appointing an experienced digital sales provider who's going to be working with the head of digital. And what's important there is that we are going to enable a skills transfer because we are competing with the best of the best when it comes to digital sales. And so we are in the process of catching up with them. And therefore we are looking at different ways in which we can do that. And this is important because we've recognized both as board and management that linear TV advertising revenue continues to decline and will continue to decline because audiences are shifting from linear viewing and are shifting to a multi-platform world, and therefore it demands that we diversify that income, and we are focusing on doing that. There was another question about our cybersecurity and the strategy thereof. SABC has a very strong cybersecurity strategy, and I think most organizations really in the world that we live in, cybersecurity is very critical. What we are also doing as part of our strategy, we run, for example, regular vulnerability tests, and we are also cognizant that there will always be a new threat. That thing is 100% secure. But based on that is that we run ongoing internal cyber awareness training programs, we have web filtering, and we continuously upgrade our system to ensure that they are sound and we protect them against cyber attacks. And like I'm saying, Jay, there will always be a new threat when it comes to this area, and the trick is for us to try and stay ahead of the curve. There was a question regarding labor. And as we said today, there was a referral of the dispute over the 24-25 salary increases to the CCMA by organized labor within the SABC. This resulted in a Section 150. In that CCMA engagement, what is really encouraging is that organized labor also understood the SABC's financial challenges. And the outcome at the CCMA was that the shareholder must be engaged in assisting the SABC with our continued financial challenges. So that's one of the outcomes, but those engagements between our HR/ER department and organized labor are continuing as we speak. There was a question regarding the YouTube channel. YouTube is genuinely the second largest search engine in the world after Google. And therefore, what it means for SABC is that it's a great opportunity for increasing our viewership and content exposure for our, not just news, but at the moment, news is the biggest one. And what this does is that it speaks to our multi-platform strategy, which I touched upon when I was speaking to the SABC Plus plans. And it helps us as well to reinforce our public service media mandate and that universal access, because we recognize that audiences view everywhere, anytime, on any platform that they want. And as SABC, we have to build that flexibility to ensure that we are where these audiences are. And therefore, what it's also done for us is that it's given us the opportunity to come up with, for example, on-demand content, bite-sized content, which is mobile, which is accessible on mobile devices. The reality is that currently we are, as part of the digital sales capability, this YouTube forms part of it. Currently, SABC does receive revenue from YouTube, but it's negligible. Hence the criticality of the MDPMI, which is currently at play with not just broadcasters, but different content providers. And then lastly, before I hand over to Tendai, I'll speak to the Ndebele issue, because that is quite understandably a contested issue. Is that in 2020, around June 2020, the SABC board approved a new target operating model, which I'm certain that members of the committee are well versed with. We've discussed it, previously. And what happened is that a new organizational structure was introduced. And as part of those cost containment, which again speak to, the bailout, was that in line with those requirements, cost containment had to be executed. And those measures then impacted, regional radio operations, because we had to really be more astute in terms of the regional radio operations. It is our understanding that, in fact, when that decision was made, there were extensive consultations with key stakeholders in the months preceding that relocation. But I think what's important to yourself, Chair, and honorable members, is that, again, this underscores the ongoing tension between the sustainability of the SABC and the unfunded public mandate. Because in fulfilling this mandate, we are in fulfilling the mandate without the resultant financial support, the organization is forced then to make difficult decisions that may not always be universally welcomed, but at that point in time are critical for the sustainability and the long-term viability of the organization. So the decision about the Ndebele Ikwekwezi, to be specific, radio station moving to Auckland Park was also purely based on just cost restructuring. But it doesn't mean that the services to the Ndebele community were compromised. And I think that's very important for me to touch upon that, because in terms of the language, to ensure that the language is delivered in its purest form, that has not been compromised. We have Ndebele speakers. Our talent is Ndebele. There's a lot of content that is derived from the Ndebele community. The difference, obviously, being that the actual radio station is located in Kempton Park. I hope we've answered the questions, and I know that we've run out of time. I'm just going to hand over to our CFO to just talk to the balance sheet, the employee costs, and the Centec payments. And I think, Chair, if you may indulge me, we note that there is a session that has been set with the portfolio committee to deep dive the Centec matter, and perhaps because of time, that will be a great opportunity for us to speak more towards the question that has been posed to us. Thanks, Chair. Over to you, Tendai.
Thank you, Nomsa and Chair. Briefly going through the questions raised, starting with Honorable Brathi. Trade exchanges are services that we acquire not for cash, but usually by exchanging the services with our airtime, and that could be, for instance, when we are hosting events or acquiring sports rights. Your question regarding broadcasting cost, those are costs relating to the actual production that we do behind the scenes to bring our services on air, be they visual or audio, and it also includes royalties that we pay to the various collecting organizations. However, the cost for Centec sits within signal and distribution and not broadcasting cost. At the beginning of the financial year, the balance that we owed Centec was just around $1 billion. At the end of the financial year, it was just under around 1.1 billion. The SABC having paid actual cash to Centec over the financial period of plus or minus 625 million. Our employee cost, the cash paid to both our permanent independent contractors over the financial period was 2.1 billion for the current year, and just under 2.1 billion. It was 2 billion and 50 million last year. So marginal increase year to year. So it has remained relatively flat. There was a question on how we get to define what is probable for TV license by Honorable Botlani. We do have a scientific algorithm that we employ. The assurance that we get is it is subject not just to management ongoing review, but to annual audit review as part of the AGSA process. In terms of results of that model and the algorithms that we use, our accuracy rate is around 87%, and we think it fairly works to allow us for our cash flow planning purposes. Government debt, what is owed to the SABC at the end of the year was around 35 million. The value of those around 225 accounts handed over was just under 19 million, and we usually hand over to DCA, which is our collection agencies, if the accounts have not yet been paid after 60 days. To just put it in context, though, the handover to DCA after 60 days is not necessary to say that we have failed to collect. It's just that it is not paid in time. We still allow then that process to unfold before we then undertake legal processes. I think there was another question by Honorable Vilakazi on the
As you
revaluation.
wrap up, Acting CFO.
Yes, it is the last contribution, Chair, on our revaluation of properties. The reason why we mentioned it is that this is our first year of implementation of the policy, and going forward it will be managed through frequent revaluation processes as the policy approved by the board. Thank you, Chair.
Thank you. Thank you very much, Acting CFO, CEO, Chairperson, for all of those insights. Also to the Postbank, the Post Office. DG, before I close this meeting, there are news reports coming through that you are making a deal with Starlink for them to bypass laws. It's reported by Bloomberg. Would you happen to know anything about that? Director General, are you still in the meeting with us? No, Director General. Okay, let me thank all of the members on the platform. I think this question that I was trying to raise with the DG will be directed to the Minister, and will come back with a response that would be very, very, very worrying. While we wish the South African delegation all the best while they are in the United States of America, I think it's also important for us to know that our laws are being adhered to. Let me thank everybody who participated in the meeting. I think that, just to echo the sentiments of members, that we're really starting to see some green shoots, in these entities, and we truly want to appreciate what we know is hard work that is going into.
Chair.
Yes, DG?
Yes, Chair, sorry, my apologies. You could just repeat what you just said.
We were asking if you had any information to share with the committee since we are here. Bloomberg is reporting that you are looking at making a South Africa to offer Musk Starlink deal before the Trump meeting, which I assume is tomorrow. We just thought that you could take us into confidence whether you have found workarounds the law or what is happening in that regard.
No, sorry, Chair, I'll have to read those headlines. Not to my knowledge do I know. As you know, we are not part of that delegation either. So I think it's probably that the parties who are part of it will best respond. Thank you.
Okay. Thank you very much. So I was thanking, the BRPs. I was thanking the board, the executive of the Post Office, as well as not the board, the executives, the board, the executives of the Postbank, the board, and the executives of the SABC. And if you could also, I think, express the committee's appreciation to the many men and women that you work with, in very, very difficult circumstances to have produced what are promising results. We do take the caution that none of these entities are out of the woods yet. And I think we echo a sentiment that was raised that shareholder support is obviously very critical for you to attain the objectives that you need to. Let me not then delay the meeting any further. Thank the honorable members for their participation, and also everybody who attended the meeting. The meeting is now adjourned. Thank you.
Thank you, Chair.
Thank you, Chair.
Thank you, Chair. Bye.